Because I put mine as well like this.
Everybody outside is just wearing like t-shirts and almost felt like summer. It's always been 21 in the 8 days. So I think in terms of weather, it's quite good like this too. Yeah. It's always super sunny, so
Why is it so quiet? Most important thing, cold coffee. Test, test. Test, test. Test, test. Test, test. Where is everybody? There's 58 people in this class. What? Any questions? Any problems? Any issues? Anything? So last week, yes, we have special class tomorrow. Okay, 1 to 3, David McElroy last class. Okay, try and come if you can. Because Dave's going to use the tutorial time, I will do another class this Thursday. Okay, 4 to 6. Is that right? In this room. So you want to come? Come as well. So what I'll do is this. We'll do. Well, there's Marcel hiding up in the corner. Oh, that's why you're up there. You get time for a cup of coffee today?
I don't know, we go dinner.
Oh, no problems, no problems. Dinner at 3 o'clock.
Yeah, you have to ask them, not me.
No problem. What we'll do is, two big things to finish. Everything's on the system, and also there's pre-recordings, so everything's there, everything you need, everything's available. It's not a problem at all. Then what we'll do is we still two big things to finish today. We'll close up the private banking lot tomorrow, and then we'll go back over the early stuff on Thursday. So we'll do FinTech and RegTech, and then we'll do Future Tech, AI Tech, Future of the Financial System, right? That's coming together very well indeed. This is the new buzzword, it's the new exciting thing in the world, so that's why we need to cover this, right? So we've done it all before, it was all recorded, it was all filmed, everything we need is on the system already, but we'll go back over everything again this week, okay? Now, what I've also done at the end of the section, I've cleaned up the bits on all the course review and support and things, so you've got all the past papers and all that. We'll try and do that today as well. I've given you notes for dissertation rules. Anybody doing a dissertation? Right, so I've put on the system dissertation rules. If you want to talk about them, we can, but they're on the system, and then there'll already be a recording as well, and I'll make sure there's another one on there as well. I've also given you exam technique notes, course revision and exam technique, so everybody can do very, 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 very well in the examination. It's quite simple. If we tell you what we expect, you know what we expect, guess what happens? The marks go up quite a lot again. So that's what the course revision examination technique for. What we'll do is we'll see how much time we've got today. We'll try and go over as much as we can, and we'll try and look at past papers as well today if you want. Okay? So they're all on the system as well. If anybody gets nervous, just go to the past papers and you'll realize this is too easy. Right? As soon as you go back to the past papers, it's very straightforward. Now this year, guess what? Santa Claus came early. Guess what happens this year? You get 24 hours. Now the exam will say this is a 3-hour paper. That doesn't matter. You get 24 hours to submit, right? And also guess what's happened? It used to be 4,500 words per paper, 1,500 words per question. This year it's going to be 3,700. So it's roughly 1,250 words per question. You write roughly 300 words per page when you're typing, so that's basically 4 pages. So students always ask, how much detail do I need to learn? How much detail have I got to go over? How much detail do the examiners expect? That's how much detail. How much detail do I need to prepare? That's it, 4 pages. You're trying to reduce these huge, massive, complex, very exciting subjects, which are going to change the world, to 4 pages. And who wants the highest mark? She does. Good, well done. Well, you do. Well, you both have joint high marks. How did you get the highest mark? How did you get the highest mark in the exam?
Relevancy.
Relevant detail. The person who can build in the most relevant detail in the exam, in examination conditions, is going to get the highest mark. It's as simple as that, right? It's nothing to do with being clever, it's nothing to do with being brilliant or being pretty or being handsome or being whatever. It's nothing to do with any of these things. And whatever happened in your previous life doesn't matter whatsoever. It doesn't matter what marks you got before. All that matters is this exam, the person that can get the most relevant detail down in the time available is going to get the highest mark. That's it. As simple as that, right? So what you've got to do is learn to compact. You've got to answer the question, you've got to compact, build in as much detail as you can, build in as much information as you can. That's what you're trying to do. You've already had exams at Christmas, so you're now getting quite good at it. The problem is what very often happens is everybody has a bad first exam, and then they learn their lessons so they'll be good at exams after. The secret is not to have a bad first exam, because that pulls your marks down, right? Yeah?
So this Master and my first exam was between January. Question is,
Oh, this is your first exam, right? Okay.
The word count includes footnotes and in-text.
Because it's an examination and not like a written exercise, strictly speaking, you don't need footnotes. You can use sentence end notes. End of the sentence, open brackets, that's your reference. End of the sentence, brackets, Walker, FinTech, 2025, close brackets, stop. That's it. That's all you need. And you don't have to full heavy citations because it uses up too much words. So long as we understand what you're referring to, so long as we understand the source, that's all you need. You can use footnotes if you want. Some people like them, some people are used to them, and some people collect the notes using footnotes, so therefore use footnotes if you want to use footnotes, but you don't need footnotes. Sentence endnotes are more than enough. Just build up your references, build up all the information, right? The secret is to be compact. Now, don't make it too descriptive, because there's some examiners can be very strict. I know, I mark far too generously, and I get in trouble for that. Some examiners can be very, very strict, so don't be too descriptive. If you give too much just cold, descriptive material, they won't give you a high mark. I think analysis and examination have to explain things before you can analyse them and comment on them, so I actually give marks for that. A lot of other examiners don't, so you've got to be very careful. Try not to be too descriptive.
I want to ask if you could give us like a breakdown of what a critical sentence would look like, so we just have an idea of how to be critical. Because I quite
If you want the marking criteria, at the top of the QM plus, the second box along, it's called assessment. In there's got the marking criteria. So what do you need for a merit? What do you need for a distinction? What do you need for whatever else? Let me answer your question this way. I'm not quite sure if I can do exactly what you said, but let me do this and see if this helps. If you use just my materials and you do it very, very, very well, you can get a really good 68. If you want to get into the distinction, you then have to build in other references and other materials around that. And if you read the marking criteria at the top, in the assessment box, second one from the left, that's what it will actually say, right? So if you want to just get a really good high 60, 68, no problems, just use my stuff alone. If you want an even higher mark, got to build that other extra material, right? Now, there's a lot of examiners like analysis. They keep talking about analysis, but what does analysis mean? And that makes students very nervous. What is analysis? You tell me. It's identifying the debate. What's the problem? What's the issue? What's the debate? What's the argument? Advantage, disadvantage, positive, negative, argue it both ways, come up with a judgment, a conclusion, a balance. That's all analysis means, right? Now what will happen is this, because you're getting more time this year, because in a lot of this, you see this in a lot of your exams, because you've now got 24 hours, it's a lot of time, right? The examiner is going to expect more in the exam. So don't just think you can get away with a simple descriptive answer. Yes, you'll get a good pass. You get a nice low 60, maybe a mid 60, but if you want higher mark, build in the analysis. You've got to build in the comment, right? Now, a little trick I thought about, which I haven't seen used before, but I'm going to tell you it, because I think it might help. Just to think about this, whatever chat GPT you use, whatever LLM, whatever you use, whatever chatbot you use, why don't you ask it, for example, we're going to do money laundering, and then we're going to do banking standards. Why don't you ask your chatbot, what are all the big debates and important analytical issues in the subject of this, you see? And you could do that for everything you're studying, for almost every question in every exam. Because what you can do is this, if the examination question is set well, it won't just let you describe something, it will want comment on something. Comment on this, comment on the effectiveness of that, comment on whether this will be sufficient, comment on something, you see? If the question is set well, it will tell you what it wants you to think about, analyze, argument that you to develop, right? But if you want to show off how clever you are, and I'm sure you're very clever, and those two girls specifically want the highest mark, what you should do is this, ask your chatbot, what are all the debates in this area? See what they say. Let's say, come up with maybe 6, 7, 8, I don't know. You can build that in. Build it in, slip it in at the beginning, or slip it in at the end as you're closing up, one or the other, so that what you're doing is this, you're showing you understand this subject really well. You know all the issues, all the debates, all the current, topical subjects which are being discussed. That's what you're trying to do with this, right? Don't just want a basic, simple answer. But the problem is, one of my exams before Christmas with over 108 students in the exam. A lot of the answers were just too descriptive. So other markers will mark them down. I tend to be too generous, but other people will mark them down, right? So just be careful. You want a higher mark, build in the analysis. Read the question, it will tell you what they want you to analyse, so you'll identify that. That's the subject, that's the debate, that's the argument. How can I build up around it? Arguments for, arguments against, authority, 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 source, 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 judgment, conclusion, final, close it up, right? Now we'll get back over all this before we finish. It's all in my notes on examination technique and course revision on the system. It's all in the stuff towards the end, right? Now, let me just make one other little point, which I think is very important. Watch your turn in scores. Now, we say this every time, but you've got to watch your turn in scores. And people are just being too careless. Nobody's bad. No one's doing anything wrong. No one intended to cheat. No one intended to do anything inappropriate. But a lot of people are submitting works which are just, the Turnitin are just too high. And I don't have any discretion. I have no control over this. If you're in the red box, which is like 38, 40% plus, you will be automatically referred to misconduct. I have no control over it. It's automatic, right? If you get into that red box, which will be 40% plus. Now, at the top, the assessment box I mentioned before, top, second box on the left, at the top of your QM plus, if you go in there, there's a little green box. It's called PG Assessment, Draft Portal or Draft Submission. Put your paper in there first, check your Turnitin score. Yes, you can get your Turnitin score when you deposit it for final answer, but if it's too high, it might be too late. You might not be able to take it out and change it, replace it, and put it back in again, right? So use that test box. Are you all aware of this? Do you know that's there? Yes? You all do, yes? Test it. You get 24 hours. There's no need for any mistakes whatsoever. So if you're in the yellow, if you're in the green and the yellow, no problems. But if you're in the red, you are automatically referred to misconduct. And misconduct don't have discretion. There's university rules. They will apply the rules strictly. And you will have done absolutely nothing wrong, but you can get punished. You have to be so careful with this, right? So be smart, be clever. Just check your score and then just adjust it, make sure it's not a problem. And again, I couldn't believe how simple the basic errors people were making. If there's 5 words taken from a report, don't use all 5 or all 10. Change one word in the middle. Change one word. Just paraphrase. It's so simple. It's all you've got to do, right? Turnitin is very powerful. It will find any copy of any form anywhere in this known universe for the last 5,000 years. We couldn't believe some of the stuff it's picking up, right? If you copied it from someone else's paper, or from anywhere else, anywhere, the system will pick it up. But it's not very clever. It's very good at locating copies, direct text, but it can't actually read it and it doesn't understand it. Like most LLMs, like most AIs, it doesn't actually understand what it's doing, right? So it's not going to check whether you've copied something. All it's going to check is whether you've used the same words that something else used, you see? So all you've got to do is paraphrase. It's so simple, it's so easy. Do yourself a favor. Check your Turnitin, make sure it's green. You won't have any problems whatsoever.
My text rules are right. My references come off this.
Well, that's not a problem. No, clearly,
It will raise the.
don't worry about it. That's the kind of thing that we just ignore. But still, it won't be too bad. It'll be quite small. And again, because that will come up, that'll be a problem in longer essays when you're using full footnote citations. So there might be 12 words identical. Yes, that can be a problem. In the exam, you're going to compress all your footnotes into either short footnotes or sentence endnotes, so that won't be a problem. I mean, very often, some people will just repeat writing the question out, and that will come up as a big red mark. And then the small submission, some of my submissions are like 1,000, 1,000, 1,000, then 3,000, that can look quite big. Because you get 3,700, just be careful. And it was really unfortunate to see some people get into trouble. They hadn't done anything wrong. There's no misconduct of any form whatsoever, but they're getting caught because they made very small, simple, basic mistakes. And then if you make simple, small, basic mistakes and there's no discretion to correct it, you get punished, and you get punished unnecessarily. There's no need for it. Just paraphrase, be smart, be clever, be intelligent. You won't have any problems whatsoever. and use your stuff intelligently. I mean, use ChatGPT, use all these LLMs, right? They're a lot of fun. I mean, they're pretty dumb. I mean, I've been trying, again, something I've been working on, just to try and get the LLM to, for example, the EU AI Act, Artificial Intelligence Act, or the MICA. We'll come on and talk about that on Thursday, right? I'm trying to do a summary of the MICA. Can I get any of these ChatGPT, Claude, Gemini, Anthropic, any of that stuff? Can I get even Grok? I used to like Grok, now I like Gemini just now. Can I get any of them to actually read something and repeat it properly? No, I cannot. And even if I'm giving it, this is the PDF, this is the HTML link, use this, use the same numbers, and it doesn't matter how long the prompt is, it still cannot do it. These $100 million LLMs still can't do the most simple basic tasks. And if that's advanced artificial intelligence, we're all, I don't know what's going to happen later, right? I mean, AI is so exciting. I've just finished another huge paper. I've written 2 enormous papers, fully published in a year and a half. That's a whole PhD on AI. Really exciting on my own this year. And that's really exciting indeed. But these things are pretty dumb stuff. But use them intelligently, use them cleverly, right? As I said, a little trick. Go and ask the AI, what are all the debates? What are the biggest debate issues in money laundering, in banking standards, in this, that, and then build that into your answer. Because that shows you really smart, you're really intelligent, you understand the subject, you understand the topical issues, you understand what we're looking at, what we're trying to reform, what we're trying to correct. That's how you build up your intelligence, right? You can use your LLMs for all sorts of search purposes, but paraphrase the stuff at the end. And if you don't know where it came from, don't not use it, paraphrase it, is what I'm going to say, right? Very often these LLMs will bring all this great stuff, it reads so well, but you can't use it unless you're going to source it. And if you don't want to source the LLM or Google AI or whatever, you have to paraphrase it. So be even more careful. If you don't know where the LLM stole it from, you cannot use it in exactly the same words, because you'll get caught. The LLM doesn't get caught, but you'll get caught, right? So again, it's very simple. You can use it, but all you've got to do is paraphrase it intelligently. It is so simple. And the smartest people in the world, and the people who are going to get the best jobs, are the ones who can use the LLMs most efficiently, most intelligently, most cleverly, right? Now again, what I've done at the very end now is a new section called e-careers. What I was trying to do is this. A lot of people get worried about job interviews and how do I prepare, what do I think about. Very often I get lots of emails, oh, I've got an interview with this, what do you think I should do with this. So I decided to type all this up. So there's an e-career section now with a whole big long checklist of points for a really good job interview. What I've come up with is a whole series of points which a good interviewer will ask. The problem is this, your interviewer is interviewing maybe 20 people that day. And you're either at the beginning, at the end, or the middle, and basically they're probably in a pretty bad mood by the time they meet you. And they want to go off, they've got a lot of work to do, or certainly if it's late in the afternoon or early evening, they get so many emails to check, they get so much more work to do, they're tired, they're fed up, they don't want to listen to another moaning, complaining LLM student, right? So there's a whole series of points to think about. And what's basically I encourage you to try and do is this. If it's a really good interview, they'll go through all these points. They'll ask you all these clever things about what's your skills and this, they'll be able to assess this and this, and they'll give you a really good score. The problem is if it's a bad interview, and again, this very often happens because someone's too busy, they can't do it, so they dump it on somebody else. And you're going to take these interviews from these LLMs won't do for. If it's a bad interview, you're going to get a bad score because they haven't asked the right questions. So what do you do in that situation? You turn it around and you make sure they get all the information that you want them to have. Do you see what I'm saying? So you'll see there's a checklist for interviews. There's a whole series of skills. These are my human skills, my capital skills, my technical skills, my blah, blah, blah. You make sure they have that. You get all that information across. If it's a good interview, they'll ask you all the right questions in the right order. Get all the points down and make sure they take all their notes. That was very good, very good, very good, very good. If they don't ask the right questions, when they're talking to you, you build in the conversation, you build it in,
can I explain this? Could I comment on this? Could I mention this? You see, you turn the interview around, and you'll do very, very, very well. Now, the biggest thing is this: everybody in every interview for the rest of your life is going to say, "What do you think about AI? Are you concerned about AI? Do you think AI will take your job?" It will come up. I cannot believe it will not come up in virtually every interview. So how do you deal with that? How do you deal with that? Someone says to you, "Are you worried about AI?" What do you say? No, in no way whatsoever am I concerned. I think it's a very exciting, powerful tool. There's very significant limitations, but so long as we're aware of the limitations, we can use this intelligently and effectively. So what I've given you as well is a whole series of notes on AI use. I've given you the top 45, we're trying to get this up to 50, of the top AI tools. Go and spend some time with that, right? What I encourage you to say in the interview is this: I know all about this. I've been doing all of this. We've been building all this into our classwork. We've been doing a lot of work on all of this. I can add value to your firm. Who's going to get the job at the end of the interview? 20, 30, 40 people. Who gets the job? The one that can add the most value to the firm. So that's what you've got to do. How can you satisfy them? I'm going to bring the most value to your firm. I can add value to your firm, and actually say that I can add value to your firm by doing this, this, and this, and this. AI is your big opportunity now. So many people don't know anything about it. They're so basic, they're so amateurish, they're so limited ability. You go above that. If you want to go from the bottom of the list to the top of the list, you basically satisfy them. I can help you with this. You might admit, I don't know everything about it, but we've been covering a lot of this and learning a lot of this, right? So even if I had an AI class before Christmas, even if you didn't do it, doesn't matter. There's e-career section. Get familiar with a lot of these really hot new tools. Try and get used to them. Canva, Midjourney, all these other stuff. Build it, have a look. You've got to start looking now at Agentics. You've got to start looking at OpenClaw. Who knows about OpenClaw? Who's played on OpenClaw? Who? Anybody? That's the stuff that's going to change the world, right? You want a job? You learn Agentics before your job interview. Who's got a job interview coming up? Any job interviews yet? Okay, well, I wish you very, very best of luck with this. But this is the big stuff's now Agentics. The thing is, nobody understands it, and all the dopes, all the coders and the programmers and the bloggers who are doing all this stuff, they haven't got a clue what they're talking about. They don't understand the law, they don't understand liability, they don't understand responsibility. We're looking at stuff produced, some of the best stuff by Google. Google produced a beautiful paper on Agentics, and it's all wrong. Because they don't even understand what an agent is in law. So it's completely wrong. It's just opening them to massive liability. So we're looking at all this stuff just now. I will put on the system in this e-career section. We're working on a series of draft papers. I've just finished 3 enormous papers, including my own take on what's consciousness, what's intelligence, what's the universe, what's existence, what's life. I've just done a third huge paper on that. Big thing now is going to be Agentics. So I'll put some stuff in the e-career section on Agentics. Do not go for a job interview unless you can talk intelligently about Agentics, okay? Because it will come up. If AI comes up, we'll say, what do you think about Agentics? And if you just say, oh, don't know anything about it, I'm sorry. Bottom, right? Big negative, big zero. And you don't want that. If you have a great interview, then at the very end they say to you, well, what do you think of Agentics? Should we use it? Should we consider this? That's the sort of stuff you're going to plan for, right? And you don't need to be an expert, but you just got to be confident enough to discuss this intelligently. That's what clever lawyers do, right? Clever lawyers don't know everything. They don't have everything in their head all the time. They can't remember everything at all times, but they know where to get things. They know how to refer. And they know how to make it sound like they know what they're talking about, right? That's what you've got to learn in your interview and in your interview technique. But these are the big things now. AI, Agentics, e-careers, all that kind of stuff. So look at the material I've put on there. I hope it's interesting, hope it's useful. We'll put some more stuff on Agentics and we'll talk about this again on Thursday, okay? Good. Any questions? And as I've said to everybody, including people just coming in, watch your Turnitin scores. Really nice people, really kind, hard-working, really good students get into a bit of trouble because they made some very simple mistakes. Because they made some simple mistakes, if the system doesn't allow any discretion, they're going to get punished. unnecessarily, unfairly. It shouldn't happen. Just be smart, be clever. You've got the deposit box, the submission portal, check it, turn it in, make sure it's good. You won't have any problems whatsoever. It's so easy to do. All you've got to do is paraphrase. It's so easy. I mean, it really is done if you can do it correctly. It really, really, really is. Okay, good. Any questions about anything? Right, that's the code. I'm going to hide this. Everybody got this quickly? Everybody got this? Right, so any questions? Any points? Okay, we've got two more big things to do. Let's do money laundering and let's do banking standards and financial ethics, okay? I'll put this on at the break, okay? Let me close this just now. We've got a lot to do. Now again, everything's on the system, everything that you require. If you ever get worried, you ever get a bit nervous about anything, go back to the study pack. That's been at the very top. I mean, students are still asking me, and I'm still saying, well, look at the study pack. And they say, well, what's the study pack? It's like document number 3 at the very top. Maybe because it's at the very top, you just look over it. If you're worried about things, go back to this to cover the basics. Now, I'll do a little introduction. Then we'll do money laundering. And then we'll do financial ethics. We'll see how much we get done. If we don't get everything finished today, we can start looking at papers today, past papers if you want. If not, we can do that on Thursday between 4 and 6 in this room as well, okay? Right, let me put this on. Money laundering and anti-terrorist financing. We need to consider the issues, the core problems that arise with regards to national and international money laundering. Money laundering essentially involves transferring criminally derived funds through the financial system to hide their source and to legitimate their use, to legitimize their further application and operation. While this involves a number of separate criminal offences and is the responsibility of the police and the criminal authorities, banks are the most effective set of institutions at detecting and providing evidence of criminal activity and criminal misconduct. The work of the Financial Action Task Force, FATF, will also be reviewed at the international level. The core European money laundering directives are considered, having regard to the principal directions involved. The specific offences created within the United Kingdom under the Proceeds of Crime Act are examined, as well as the other wider statutory framework for money laundering and anti-terrorist financing control. We will also separately note the work and joint guidance produced by the Joint Money Laundering Steering Group, JMLSG. We will review that, as well as the latest money laundering regulations. I've provided a number of core reading, additional supplemental reading, and then further external reading if anyone wants to follow up on any of that. Everything required is made available on the system. Okay, now on the system, let me just set this up as well, so later on we'll do the same thing. We will introduce now, what you have on the system as well, there's something called the Encyclopedia of Banking Law. I used to be a general editor of this. So basically, all the core stuff is in here, everything. And all you have to do is just go through this if you want, but I'll give you a short 2-page summary that deals with everything. Now, what I've also done is there's a separate set of materials which provide all the core reading to the measures in the FSA handbook. What I've basically done is this: I've taken all the key measures from the Financial Services and Markets Act 2000, 400 pages, I can reduce to 1 page. With the core sections in the handbook, with the core parts, principles for business, fundamental rules, the statements, APR and COCON for individuals and for firms, other key measures within SYSC, as well as the additional provisions on banking standards, conduct source book, you've been covering that, BCOBS, as well as the COB, market conduct, as well as the new consumer duty, customer duty. I've summarized all of that in here as well as separate things like the lending standards. Everything that you need to know in terms of the banking standards, banking conduct is in here, and then you can reuse that in a larger, wider money laundering question. So all of that's provided in a summary form on the system as well. The key reading, as I've mentioned already, is the encyclopedia. Basically, everything is covered there. I'll put this on at the break for people. The key material is in here, if you need anything on money laundering. We'll go through all the basic stuff now. And again, past papers, past recordings, everything is available on the system. The core thing we need to go over, we need to cover is this one. Money laundering. All of the key debate, all of the key issues are here. So let's just work through this. Any questions, any points, please? And as I said before, and I'll encourage you again, for people who've just come in, just spend a little bit of time with your favorite chatbot. Ask it, what are the biggest issues in money laundering just now? See what it comes up with. We don't want to build in too much material, but that would look really good in an exam. If you could say, oh, the current issues in money laundering are concerned with this, then answer your question and then build all this other material around that as well, right? I strongly encourage you to think about this. I strongly encourage you to review this. Okay, let's do this. We will cover everything you need. As I've said already, the exam this year will be 3,700 words. So basically it's roughly 1,250 per question. You write 300 words per page. That's roughly 4 pages. So it's 3 4-page answers. So what you're trying to do is compact as much information, detail, and analysis as you can in those 4 pages. Okay? Good. Any questions, any points? Right. I'll go for about, 30 minutes, maybe 40 minutes. We'll have a break. Then we'll do banking standards and ethics, and then we'll look at past papers. Okay? Good. Money laundering, law and regulation. We have to consider the nature, structure and operation of the controls which apply in the money laundering area. This is a very important subject, this is a very important area, in particular in light of the massive amount of economic loss that could arise and the social damage and instability that this can cause. A number of difficult issues arise in relation to money laundering. Mainly these are concerned with the global nature of the activity, the online virtual nature of many current types of financial transaction, financial operation, as well as the power of new technology, both in allowing criminals to engage in money laundering and our ability to control it, as well as how we can manage, limit the damage that money laundering causes more generally over time. There's an associated series of problems, mainly in particular with regards to proper responsibility and liability for loss. How can we design effective systems? How can we manage this over time? Who should principally be responsible for this? What we're essentially looking at is a number of core basic introductory points, which I've highlighted at the top here, in terms of source and criminal spread, in terms of criminal value, definition, stages and operation, criminal damage, and money laundering response. But let me just highlight 3 core issues to begin with. The first one is concerned with source. This is a difficult, complex issue which impacts many areas of activity across society, across markets, across business, and across government as well, to the extent that this may be connected with bribery, as well as fraud and money laundering and anti-terrorist financing activity. The main point simply is this: we have to have a composite response. We have to have a compound response, which will be made up of a number of different areas of control. So we will have clearly law, civil law and criminal law. We will have regulation, both in terms of co-regulated requirements as well as internal systems and controls provisions in banks and financial institutions. as well as we'll have company law, corporate governance, as well as we'll look at a whole series of other areas where we can build all of this in together. Because of the massive wide area of possible use and application, we need to consider all of this together and try to construct an overall wider integrated whole. Second key point of debate is who technically is responsible for this. Legally, it is the police. It is the security services, and it is the crime prosecution. They are responsible because this is a criminal activity. It's their duty to investigate this and prosecute this. The problem is they just don't have the expertise. They don't have the information. They don't have the data. And if we relied on the police, security services, and prosecution services alone, we would have no success whatsoever in this area. Principally, in practice, a lot of this comes down to the banks and the core financial institutions that make up the principal financial system. Effectively, in practice, banks are the key detectors, collectors of evidence, and the people who will initiate a lot of the core remedial action that has to be undertaken in this area. A problem, however, arises in that what's effectively happening in practice is that the banks themselves are almost being treated like criminals. And this is where I have some quite significant difficulty with a number of the decisions and problems and conduct of other parties in this area. There was one specific fine. National Westminster, NatWest, was fined £264,772,619.95 for breach of money laundering rules. That was in 2021. £264 million fine against one of the largest banks in this country. That was the first criminal prosecution against the bank. This is all referred to in the papers. On the right-hand side, you'll see it there. On the right, in the middle, NatWest, 264 million on 13th December 2021. That was Mrs. Justice Cockerill. Is that appropriate? Well, because it's a fine, what happens to those funds? It basically goes into the government's tax collection purse. It basically goes straight to the government. It doesn't actually do any good whatsoever. In these types of cases, what should be happening is, even if there is a penalty, and I would even question the extent to which we need those, if there is a penalty, that should be fed straight back into the system to allow the banks and financial institutions to develop more effective internal control, computer and other advanced technology systems, including new artificial intelligence systems, to try and detect and counteract all of this. Rather than fine and impose a criminal penalty of this enormous amount of money, that should have been reinvested, reapplied back into improving the systems within that specific bank. I think this is wholly inappropriate when we treat the banks as if they were the criminals, when basically the whole of the enforcement mechanism in this area only operates with the support and positive contributive work of the banks and financial institutions. So I would have a system of what we could call penalty recycling, where basically any type of fine, any type of administrative or regulatory sanction that would have been imposed is turned back round, and we compel the banks to use those funds to improve their systems. I think that would be a much more effective way to make this operate over time. And also what we need to do is this: instead of having this kind of rather cold, brutal relationship between the banks and the regulatory authorities in this area, and the police and the security services and the criminal prosecution services, we want to encourage the development of a much more positive, cooperative, integrated, coordinated relationship. We would be much more successful in managing this, dealing with this, if we had that type of positive relationship. I think we've made a lot of major mistakes in this area by effectively treating the banks as the criminals when they're the ones who actually make all of this work in practice. Just in terms of how we can explain this relationship, what are the limitations of the police and the security services? What are the advantages of the banks? I've summarised them at the top here. Bank value: market proximity and access, market understanding, expertise and experience, transaction expertise, market data access and control, data management controls, in particular with general data protection regulation, compliance with all of the necessary systems to make this work. wider systems and controls, compliance obligations, SOISC, under the core regulatory rules, including the Financial Services and Markets Act 2000 and the FCA, Financial Conduct Authority Handbook of Rules and Guidance. 7, speed, immediacy, cost and efficiency. 8, bank compliance and avoidance sanctions, client interest, protection and loyalty, if we can get a positive relationship with the clients. Bank reputation, obligation to act with integrity. This is to a significant extent in the bank's own interest as well. We can also have additional support through customer, funds and business ID checks. A lot of money laundering in practice comes down to KYC, know your customer, KYB, know your business, and KYT, know your transaction, or KYF, know your funds or other source. Market integrity and market stability more generally are improved, cross-border efficiency and effectiveness, because these large banking groups can monitor activities on a cross-border basis and across the world. For all of these reasons, banks in practice are effectively the most useful, important, significant institution to try and manage money laundering, although technically the legal responsibility goes back to the police and the security services. How can we make all of this work most effectively over time? By creating a positive, incentive, reward-based relationship between these authorities to make this work most efficiently, most effectively, rather than treating the banks as criminals themselves. The third key point to mention is this, and this is very significant. What about longer-term impact and effect, continuity of this over time? It is quite depressing, and I'll come back to this in a couple of minutes. Total criminal value of money laundering funds is anything between $800 billion and $2 trillion every year, $2 trillion plus. That represents 2 to 5% of global GDP is held and managed through criminal organizations. The problem is, what is our current success rate? It's as low as 0.25%, and I've seen figures as low as even 0.2%. Now, is that a problem? Well, yes, it is a problem, because we need to make this much more effective, much more efficient in practice, and that's why I think we need to have a different relationship between the main authorities involved. Is that still a problem of itself? No. We still need money laundering controls. We still need anti-terrorist financing measures. We have to create an appropriate disincentive. There has to be a significant risk and fear of being caught, of detection. That has to apply, and it has to apply on a continuing basis. Even though our current global average success rates are still very low, we still have to maintain this. We still have to continue with this. You need a continuing operational, significant, meaningful deterrent, or else everything else will collapse. Society will just degenerate into criminal activity. We have to, over time, begin to ensure that all of this works more effectively. And all we're trying to do is this. We're just trying to simply construct a larger integrated framework that pulls all of the different sources, financial, civil, criminal, corporate governance, as well as wider ethical standards, pull all of this together, and then now enhance it with financial technology and regulatory technology-based mechanisms, as well as now new advanced technology, what I call tech, FinTech, RegTech, and tech, including advanced artificial intelligence, AI tech, robotic tech, RI, and future synthetic intelligence, SI. All of this can assist. We just have to pull all of this together into a more complete, effective, integrated whole control model, and ensure that all the parties, all the counterparties within this work most effectively together. Let me just go back to these other core introductory points. What is money laundering? What are the sources of money laundering? A lot of it goes back to ancient historical practices in banking and in financial markets. A lot of this is tied to, for example, the hundi, the hawala, the chit, and the fichin. The hundi is ancient Indian practice. It goes back to, I understand, 1327. It was also encouraged by the British when they were in India between 1858 and 1947. It is essentially a form of brokerage whereby you can deposit funds with hundi brokers. They give you a hundi, which I understand is a piece of paper, which is very similar to a bill of exchange. You can then take that to any other broker anywhere around in the country or outside the country, and you can cash that for payment. It's essentially, it's called an underground banking system, though I think that's possibly a little unfair. It is simply an unregulated, historical, more traditional form of money transmission and exchange. The hawala is almost the same idea. Both the hundi and the hawala could operate without payment like receipts, payment devices. It could just all be done on a ledger basis, on a registered basis, but you still need the person receiving the funds still needs to provide evidence to the other broker that they are entitled to those funds. So in practice, a lot of it will involve some form of payment receipt, although it could be done on registers alone. The hundi tends to be Asia, Southeast Asia. The hawala is the Middle East, Saudi Arabia, around those areas. The chit is another more specific example of this, again, largely I think originating in India, where you can actually borrow, transfer funds and lend. It's, again, a sort of surrogate alternative non-regulated banking system. The Feichin is the Chinese equivalent of a lot of this. Again, it's ancient in origin. This goes back to either the Tang or the Song dynasty, 804 AD. Astonishing that the Chinese were using these practices so early. Basically amongst the earliest form of money. Essentially a promissory note or a banknote, which is simply a bill of exchange drawn on a bank. The Chinese were using this 800 years ago plus. The problem is a lot of this is still in use, is still in practice. It can be used by criminal organizations, although it's not originally intended for that purpose. It can be misused, and this is why we have to try and monitor this, control this, and where we can transfer the legitimate use of lending and payment practices off these more traditional non-bank underground banking systems into formal banking systems. As we've already mentioned, this problem is enormous. $800 billion to $2 trillion goes through money laundering and anti-terrorist financing measures. Every year, that's 2 to 5% of global GDP. Our current success rates are as low as 0.25%, 0.2% in combating this. What is money laundering? In practice, we tend to consider it in terms of 3 core stages. We talk about placement, layering, and integration. This goes back to the Financial Action Task Force, which I pick up again on towards the end of the note. The Financial Action Task Force is the main international organization in this area. It was established by the G7 at a summit in 1989, essentially based originally in Paris. There's 39 direct members, 200 other countries participate with 9 other associate members. It's carried out a large amount of significant work in this area. Its key contribution was establishing this initial division of layering, integration, placement, layering, and integration. Placement is when you take criminally derived funds and you build them back into the financial system. So you place them back into normal traditional markets which are not criminally connected or derived. Layering is when you then merge it with other activities so it almost becomes disguised or it dissolves into legitimate transactions in the proper banking and financial system. And then integration is when you can take and extract those funds back out into normal society, into normal operation and use. That is money laundering. You place, you disguise, you layer by integrating it into other things, and then then you can extract it back out into society as a legitimate form of funds. Now, very significant difficulties arise with just this simple basic idea of criminal damage. I've summarized on the slides, I've provided a separate set of slides available on the system. In slide 4, I examine this in further detail. Economic damage. What's the basic problem with money laundering and terrorist financing? Economic damage, financial instability, financial inefficiency, financial systems abuse. All of this is in the slides. Criminal damage, protection of the proceeds of specific crime, protection of criminal identity, and the consolidation of criminal wealth over time. That's probably the biggest single problem. It's the consolidation of criminal wealth over time, especially once this is integrated back into society, having been layered through the existing legitimate financial system. And then socially, 3 further areas of social damage. This undermines normal legal processes and the rule of law. It undermines the stability of government, especially in corruption situations, and it undermines the existence of society itself more generally as we increasingly move towards anarchistic governance structures in many parts of the world, across the world. This is a very significant problem which we need to monitor and manage. However, having said all of that, the other difficulty, and this is again on the slide, I've marked this in red, the problem is that in many parts of the world where there isn't enough legitimate, proper investment to fund existing social needs, a lot of this can actually provide important social value and important social benefit. We can use this for legitimate investment, for market liquidity, and this then creates employment, which then produces taxation with wider overall economic development. And we actually see that in a lot of parts of the world. Where there is the most significant criminal activity, there can also be, following these 3 processes of placement, layering, integration, a large amount of significant investment back into local communities which would otherwise not have been there, which then creates associated ancillary benefits in terms of employment and taxation. This is a significant, difficult issue. Once the funds have been legitimately replaced back in, reinvested back into the financial system, they can actually provide a significant amount of substantial longer term value and benefit. However, at the same time, if that is still criminally held, that will overall increase the aggregate total amount of global wealth stock held by criminal organizations over time, which we have to consider. So, again, I've summarized that in the next point. Criminal damage. This can produce legitimate investment, liquidity, employment, taxation, and growth. How do we manage all of this over time? Those are the issues that we're coming on to try and consider in further detail. In terms of response, as I mentioned before, it has to be a complete, composite, compound response so we can try and understand how all of this comes together over time. We need a combination of civil law, criminal law, financial regulation, including internal systems and controls, as well as regulatory requirements, more detailed specific terms of regulation, as well as company law, governance, as well as, again, larger ethical standards on top of all of this. We need to try and make all of this work in a total, single, integrated manner. What is the historical development and source of the law in this area? I deal with all of this in further detail in the core materials I've made available on the system. I've just summarized them on the paper here. The origin of international money laundering controls goes back to the core work commenced at the Vienna Convention, 1988, which criminalized money laundering in relation to drugs, trafficking, and established basic core international cooperation mechanisms. There was then important follow-up initiative with the Council of Europe Convention in 1990, which imposed onerous obligations, including the provision of investigative assistance, search and seizure, and confiscation of funds in the money laundering area. A lot of the most important work at the international level was then taken forward by the European Union. There's a total package of 6 key anti-money laundering directives. First money laundering directive, 1991, consisted of 18 articles, established a basic program of anti-money laundering controls within the single European market. Second money laundering directive in 2021 corrected a number of perceived inefficiencies. In the first directive, it consisted of 10 articles. Third money laundering directive was a revised set of what's called the FATF 40 recommendations on money laundering, and again we'll come back and look at this in further detail. I've mentioned this down here. The FATF has produced 40 core recommendations on anti-money laundering, as well as an additional 8 and then 9 special recommendations on terrorist financing. So the core international requirements are the FATF 40 recommendations, originally issued in 2012 and amended in 2022, supplemented by the 9 additional special recommendations on anti-terrorist financing, originally produced in 2008. There's also a separate methodology that assists manage the implementation of the money laundering controls. That was 2013, amended in 2020, and then further work's been conducted in relation to what's called non-cooperative country jurisdictions. We used to call them NCCTs, non-cooperating country or territories, or country territories. There was what was then called a blacklist, and then now a grey list. So in the older books, you'll see reference to the NCCTs, which I still refer to on my paper here. That's now been replaced by what's called the blacklist. There's 3 countries in the blacklist now: North Korea, Iran, and Myanmar. And then there's around 24, 25 countries in the grey list, which the FATF monitors each year, because this could be major problems with regards to the permitting, because the laws aren't strong enough, they allow money laundering to be conducted in these countries. So there's 3 countries in the blacklist now: North Korea, Iran, and Myanmar, and around 23, 24, 25 in the grey list, which is maintained by the FATF. The third anti-money laundering directive at the European level in 2005 then implemented, gave effect to the 40 recommendations. The fourth directive implemented a series of additional measures adopted in response to a Deloitte report on the third anti-money laundering directive. We then extended this in 2028 under the fifth anti-money laundering directive to include terrorism activities, as well as in response to the Panama Papers, which had been disclosed and revealed a large amount of information about criminal activity across the world, in particular in offshore financial centres. There was then a sixth money laundering directive which standardised offences and liabilities. The United Kingdom implemented 1 to 5. We didn't think we needed to implement 6 because we already had all of those measures given effect to under the criminal laws in place. In terms of UK money laundering, I've then summarised the key measures in the next section. The statutory basis for this is now the Proceeds of Crime Act 2002. That's the core main measure. There were some earlier provisions. I've mentioned those in the table. They're not on the summary, but I'll just go through them very quickly. There was Drug Trafficking Offences Act 1986. There was the Criminal Justice International Cooperation Act 1990. A Prevention of Terrorism Temporary Provisions Act 1989. Criminal Justice Act 1988. Drug Trafficking Act 1994. Anti-Terrorism Crime and Security Act 2000, and then the Proceeds of Crime Act 2002. All of that's referred to in the longer, more detailed papers. The key measure is the POCA, Proceeds of Crime Act, POCA 2002. This essentially established what was called the Assets Recovery Agency, which was a government body that would seize funds which had been derived from criminal activity. This was a very important core innovation. It also provides for, you see listed here, criminal confiscation, civil recovery, anti-money laundering controls, Part 7, investigations, insolvency, information and cooperation. In practice, what had happened was the ARA was later merged with the SOCA, which is the Serious Organised Crime Agency. That was in 2008. SOCA itself was then replaced by the National Criminal Agency, NCA, in 2013. The NCA now consists of 5,000 staff with hubs in offices in 40 countries across the world. Within the NCA, we now have what we call a National Economic Crime Centre, an NECC, which was set up in 2018 to coordinate the task of responding to economic crime and draw together the intelligence capabilities of all of the other organisations involved. Within the NECC, we have a separate, what we call Joint Money Laundering Intelligence Task Force, a JMLIT, which I will add to update the paper. So the key organisation which handles this now, manages this, is the National Crime Agency, NCA, which has within it a National Economic Crime Centre, and then that NECC has within that a joint money laundering intelligence task force. The reason I'm highlighting this is that there's a separate joint money laundering task force that we're going to come on to mention, which produces guidelines, which are the main measures that the banks implement, which secures among the most effective money laundering controls on a daily basis, which are designed to deal with the criminal activity specifically. Those are given effect to through the parallel systems and controls requirements imposed by the Financial Conduct Authority on the banks. So what we'll see is this: while we've got this criminal arc, this legislative background, in practice the two key measures are the systems and controls requirements imposed by the Financial Conduct Authority with what's called the money laundering regulations, which we'll come on to refer to as implemented through the SYSC requirements in the FCA handbook, which give effect to this parallel joint guidance, all of which is referred to on the outlines available. The Act itself, the POCA, it creates 5 core criminal offences. These are the key measures which are used to control money laundering in practice in terms of creating an offence against criminal conduct. This is the core infractions: concealing criminal activity, criminally derived funds and money laundering, section 327. Arranging, 328. Acquiring, 329. Disclosure, 330. And then what's called tipping off. If an institution finds out that a particular individual or organisation has been investigated, if they tip them off, if they notify them that they're under investigation, that of itself is a separate criminal offence. So there's 5 core criminal offences created of concealing, arranging, acquiring, disclosure and tipping. And then there's 5 core sets of responses and orders that can be issued in response to these criminal activities. We've got production orders, search and search warrants, disclosure orders, customer information orders, account monitoring orders, sections 240, 352, 357, 363 and 370. So this is the core criminal background as supplemented by what's called the Terrorism Act 2000 and then the Criminal Finances Act 2017. The Criminal Finances Act enhanced a number of the earlier controls and protections. The most significant new element is what's called an unexplained wealth order, a UWO, unexplained wealth order. The High Court can require any individual or company to explain the source of funds to purchase an asset, and then if they cannot do that, they can have that asset confiscated, seized. This has been used in connection with, for example, Russian oligarchs or various other activities of rich, wealthy people, individuals in London. They've been asked to explain where the source of the funds came from, and if they can't explain, they will lose their jets, their yachts, and their very expensive cars. This has created an important, significant deterrent in practice. We then have the money laundering regulations I mentioned before. These are the key sets of provisions. The core parts, sections within the money laundering regulations are listed on the left-hand side. Introductory measures, money laundering and terrorist financing, customer due diligence, reliance on record keeping, beneficial disclosure of beneficial ownership, account information requests, supervision and registration, transfer of funds, enforcement, appeals, and miscellaneous provisions. These are the core measures that the banks now comply with, the 2017 money laundering and terrorist financing and transfer of funds regulations. Core requirements. Certain amendments were made subsequently in the following 4 sections. A lot of this was just extending the scope of application, in particular to include activities such as casinos and then later crypto assets, trust services. We had to ensure that all of this was given effect to. The FCA set up a registration scheme for all of this to be notified to it by a certain time, and then that was extended. That's what those various other additional amendment provisions are for. We then come on to the Joint Money Laundering Steering Group guidance notes. I've expanded I've referred to this on the paper, point 3 on the right-hand side. I've expanded this in more detail in the slides and in the text provided. There was 3 parts, there was basically 3 volumes to this joint guidance. It basically worked with the money laundering regulations and with the 2 key sets of measures that the banks complied with on a daily basis, and then we'll see how that's strengthened by the FCA SYSC measures in a couple of minutes. Essentially, part 1 of the guidance dealt with senior management responsibility, then internal controls. You had to have what's called an MLRO, a money laundering reporting officer, in all the large firms. You had to adopt a risk-based approach, customer due diligence, suspicious activities reporting and data protection, staff awareness, training and alertness, record keeping. All of that was provided for in part 1 of the joint guidance. What then happens in part 2, we got separate sections, chapters, on each core area of financial activity, up to 22. So obviously, retail banking, credit cards, electronic money, credit unions, wealth management, financial advisors, life insurance. All the different types of financial area, activity, sector, all of those up to 22 are provided for in the joint guidance notes, with quite substantial detail provided as to what's expected of each of those sets of financial institutions to help manage and combat money laundering over time. There is a part 3, although that's constantly, if you go to the website just now, I checked yesterday, it's marked part 3 is under review. It included provisions on transparency, equivalent markets, compliance, counter-terrorism. It was more specific aspects and cross-border issues. The guidance was very important. The most recent revision of the 2023 amendments you can access online, very useful indeed. Point 4 on the right-hand side. The Financial Conduct Authority, before that the Financial Services Authority, did have a money laundering source book. What then happened was, because we published the money laundering regulations and updated them to the 2017, and because we have the detailed guidance produced by the Joint Task Force, the Joint Money Laundering Steering Group, there was no need, it was perceived, for the continuing existence of the money laundering source book. So there was an FSA, then FCA source book for money laundering, but that has now been deleted. It was perceived it wasn't necessary because we have the regulations which impose the detailed requirements, plus we've got the guidance set out in the Joint Money Laundering Steering Group guidance notes. How does the FCA manage this, however? It builds it into its statutory objectives and into its systems and controls conditions. The systems and controls requirements are called SYSC, and there is an SYSC source book in the larger Handbook of Rules and Guidance produced by the FCA. The core measures are PRIN, High Principles for Business, and we'll come back and look at those separately, and then SYSC. And we'll see it's these systems and controls conditions, that's where a lot of the core regulatory content is now imposed and applied in practice. With regards to the FCA, this is point 5. The FCA has what's called a strategic objective and it has operational objectives. The strategic objective include minimizing financial crime, that's section 1D2B, and then, section 1B5B. I'll mark this up onto the system for you. Section 1B5B, as well as, that's the strategic objective, as well as in the operational objectives, there's 3 which are imposed on the FCA: consumer protection objective, integrity objective, and competition objective. And what they specifically do is they incorporate minimizing financial crime again into the integrity objective. That's in 1B3.2. And I'll mark this up on the outline for you. So there's 2 separate obligations in terms of statutory objectives, both with regards to the strategic objective and the operational objectives of the FCA. In implementing those, the FCA then imposes conditions on banks through its SYSC source book. the main provisions I've summarised on the text for you. We've got SYSC 3.2 stop 2 stop 2, 3.2 stop 6, 6 stop 1 stop 1, and then 6 stop 3, 6 stop 3 up to 11. These are the key systems and controls requirements. Let me go through these very briefly. Firms are required to set up appropriate reporting lines, which should be clear and appropriate, having regard to the nature, scale, and complexity of their business. These should specifically then incorporate appropriate controls countering the extent to which the firm might be used for financial crime purposes, not just money laundering, but financial crime more generally. The firm also has to ensure that its policies and procedures include systems and controls that enable it to identify, assess, monitor, and manage money laundering, and that these are comprehensive in scope and nature. And then money laundering risk itself is defined. Firms have to manage their money laundering risk. So what we get is this: there's a series of specific obligations imposed through SYSC which support the bank's implementation of the 2017 money laundering regulations and the joint guidance notes we mentioned already. What else does the FCA do? It has a separate, what it calls a financial crime guide, an FCG. The FCG consists of an introduction, financial crime systems and controls, money laundering and terrorist financing, fraud and data security, as well as bribery and corruption, sanctions and asset freezes, insider dealing. It's basically its own guidance on how these should be implemented and applied in practice. On top of all of that, there's then something called thematic reviews, and the FCA over a number of years has been reviewing specific areas of activity, and it's then collected those reviews together. The Financial Action Task Force does the same thing at the international level. So the FCA at the UK level has been conducting a series of reviews. It just builds them together and indexes them. They cover things like, for example, high-level management and fraud risk, review of private banks' anti-money laundering controls, automated money laundering, transaction monitoring systems, data security, offshore financial centres, anti-bribery and corruption measures. All of that is built into the larger FCA anti-money laundering response. What we can then see is this: we have more particular measures at the UK level dealing not just with anti-money laundering and terrorist financing, but I've mentioned there, you'll see bribery and corruption under the Bribery Act 2010, data security is the GDPR and the Data Protection Act in the UK, fraud is dealt with under the Fraud Act 2008, but then financial sanctions, and we have coronavirus and other measures. The FCA used to maintain a section on its website, I provided the link there, which mentioned how all of this falls under its larger financial crime remit, in addition to more specifically money laundering and anti-terrorist financing. We've already mentioned the Financial Action Task Force at the international level. This is the main international body which responds to anti-money laundering measures. As I said already, it was established by the G7 at a summit in 1989. Its core contribution are the three divisions we mentioned before: placement, layering and integration. There's then the 40 recommendations on anti-money laundering, and then the 9 additional supplemental recommendations on terrorist financing. All of that summarised in the table. We've also got what were the NCCTs, non-cooperative countries and territories. There was only 3, North Korea, Iran and Myanmar. We now refer to those as the blacklist, and then we have a larger grey list which supports that we mentioned already. It was around 23, 24, 25 countries in the grey list. There's other initiatives adopted in other particular countries, for example in the United States and elsewhere. I have a parallel paper on the system which reviews these, but we don't need to go into the detail of that. The most interesting thing to mention are the fines. What I've also provided is detail with regards to the types of penalties which are imposed in the anti-money laundering area. So you'll see that HSBC was subject to a £63 million fine in 2021, and then there's a series of other fines there. Sunrise Brokers, Credit Suisse, Lloyds Bank, Crossville, Sapien, Simon John Varley and Adrian Horn. The most significant one to note is the NatWest fine in December 2021, £264,772,619.95. That was the first, as I understand, only still, criminal prosecution against the bank for breach of anti-money laundering controls. In that particular case, this was relying on, it was a branch of NatWest in, I think it was Bradford. A company called Fowler Oldfield had opened an account. It confirmed that it wouldn't deposit cash. Everything would be done through checks and through funds transfers. £365 million were transferred. Contrary to what had originally been stated, £264 million were in cash. So 2/3 of the payments made by that company in Bradford were in cash after it said there would be no cash payments. The systems within the bank had misdirected and misclassified a number of payments, treating them as check payments rather than as cash payments. The money laundering staff had identified this as a problem and recommended that further action was taken, although no action was taken, and it was for that reason the bank was convicted of 3 criminal fines for money laundering. And then in response to that, Mrs. Justice Cotterill imposed a £264 million fine. And you just have to form your own opinion as to whether that was appropriate or not. I think it was completely inappropriate and completely unnecessary. The point simply is, because it's a fine, those funds are then lost. What should have happened is the bank should have been directed to invest probably the equivalent amount of money in improving its own internal systems. That would have been of much more value, much more use to society, to everybody going forward. I think that would have been the appropriate response. With regards to money laundering more generally, this represents a serious and complex global problem, both in terms of the conclusions at the bottom, in terms of damage and response. A significant number of penal and preventative measures have already been adopted based on international standards, European measures, and then specific national controls. We have to develop a series of models to balance legitimate interests, especially in the financial sector, with reasonable and proportionate management responsibility and liability. We have to impose all the necessary measures, requirements, but we have to do it in a balanced, responsible, fair, appropriate manner. The most effective controls are based on know your customer, know your business, know your funds, KYC, KYB, KYF, as well as suspicious transaction reporting, the use of a money laundering officer, and then risk assessments. I've called them RATs, risk assessment templates, to try and ensure that we have enhanced management and effective internal systems which can control all of this and respond to all of this over time. Banks have undertaken the traditional role in combating money laundering, although ultimately the effectiveness of all of this will be dependent upon ensuring consistent national implementation and creating a cooperative, coordinated and integrated enforcement regime and environment within which all of the bodies, all of the agencies involved can come together and cooperate, ensuring that all of this is given maximum effect and we can secure the most efficient and overall secure benefits over time. With all of this, we can understand the current international, European and United Kingdom money laundering and anti-terrorist financing framework. Any questions? What I realized is I've got some extra notes, so I'll go back over this. I'm going to add some more notes to this just to make it a bit more clear, a bit more. If I've already done it on my set of notes, I may as well transfer it to this. It's a good subject, it's an important subject.
lot of people spend a large part of their career doing this. If you do compliance in a big institution, you need to know this type of stuff. So you need to get on top of this. It's very useful, it's very interesting, it's very important. Any questions? Right, let's have a break, and then we'll do banking standards and financial ethics. Everything all right?
More than right.
You're happy? Well, good. Yeah, you're actually happy.
Right? Ready, okay? I do this. You have everything.
Wow! That's amazing. Can you change the color? Do you like the colors? I like blues.
I like the color because it's like clothes.
Okay, right.
And here you have everything. And if you go here, cases, jurisdiction, search, see search, you can all the different types.
Right.
No, wait. Adjective. Motion. Thing that has adjective. So when you click on it,
What, you bought this, that's not for you. And it keeps up to date.
yeah,
You don't do it manually. The bot does it.
so for now, like
It's Chinese to the official website. Yeah. Just do that translation.
even have news by then and sheets. Here. Step by step.
Show me. Diary management, can I put oh yeah, you have to give them a name, yeah. Walker ball. Diary management.
Okay. Daily management.
Diary.
So for example, okay. And sector, you can just first one. So, then capabilities. Here it takes like 20 hours. So set
These are the tools. Tasks, these are tasks.
capabilities. So task automation, right? Data extraction, classification, data management, simulation,
Yes.
text generation,
Yes.
ranking, scoring, resource allocation.
Yes.
Okay, imagine you have this full used. So it has access to your mail.
Yeah, but I don't. We're not giving. We're not the big slide.
No. It's not making the agent basically. It's checking if what you have is something that you will have.
Oh.
It's a full audit engine that I built in a weekend.
Honestly.
Wait, just imagine like okay, so it's just okay. Data oversight. So here it has your personal data, right? Human oversight.
Yes.
Okay, so human in the loop. Like,
Yes.
human in the loop. Each decision, or like periodically, or just like overall. And can you overwrite the decisions of
Yes.
off?
Yes.
And then continue to review. Like here, you can check everything. Run complete and setting. That's it. Right. Edit complete, and then it shows you the risk. And then you can even download the PDF report, and PDF report. It looks like
Amazing. Right. What about Wednesday afternoon, Thursday afternoon? Wednesday.
Thursday. I have class with you until 6, I think. Or Thursday too, or
6. What about Thursday?
yeah, Thursday, Saturday also.
Well, you decide. I can
I'm
decide.
leaving on Sunday, but this is like.
Well, what's most convenient for you? This is amazing. Well done.
But the website is great, and also like I put this official and unofficial international, like everything is here, everything.
Amazing.
The world.
When am I going to talk? I'll get my phone.
Oh, and I don't know, what do you think about the name? So, the name basically, the name is this Low AI Gov Hub, because I like Hub because Hub is like GitHub, you know. GitHub.
Yes. No.
And Low AI Gov, so for governance and
Really
for law,
clever. Well done.
and everything is here. So
Right. I need to check one thing on my phone. Okay.
Yeah.
Come back in 1 minute.
yeah, sure.
Marcel's amazing. Marcel, well done. Have you eaten your lunch?
I'm going to.
Have you done any work? What have you done?
Yeah.
How much of work have you done? Are you working or are you playing?
I've done.
Fortnite.
I've done.
Done what?
I've done maths.
Okay, you had lunch?
Go to.
Okay, good. I'll see you later. See you at 6.
See
Bye.
ya.
Bye. I mean, the issue that if you people look at everything like they're kind of hard, and of course that's the real issue. Because like just like Hi.
Just a question. So, for example, you have 3 articles on AI, right?
Yep.
So, in citing it, it's okay to just put open bracket.
Keep it short.
George Walker, AI.
AI, rights, law, and control, or keep it short. Keep your words down. You've only got 3,700. You'll gobble them up very quickly. Keep it short. Keep it direct. Keep it simple.
Sir, I was just looking at I read your materials for and I think there's just need to be an update for some of the areas with respect to financial action task force because there's no more 9 special recommendations.
Sorry?
There's no more 9 special.
There's none. What happened?
Oh no, it was consolidated into 40 in 2013.
Is that right?
Yeah. And then the latest version of the pack of recommendations is February 2025, and the methodology is October 2020.
Great. You're right. Yeah. This. I was looking at it. It looked a little bit old when I was reading it. That's what was making me nervous. That's why I said I'll try and update that. I'll try and clean it up. But also, see, in my copy, I've got other things. I've got SYC. I wrote them all out.
Yeah.
So I'll put that on the back as well. I'll create an annex, right?
Okay, let's do this. Now, again, I mentioned this before, so I'll just put it on the system again. This is a note. It's a summary of the FSME. This is the FSME handbook on the left. This is PRIN. We're going to talk about PRIN, then the fundamental rules. This is the FCA. This is the PRA. The first two are the same, and then the rest just expand to focus on the issues relevant to the PRA. Now, strictly speaking, because the FCA was set up as a conduct regulator, the PRA shouldn't have done this. But nobody told the PRA not to do it, right? It didn't have legal authority to do this because it's only got authority to issue a rule book. So the PRA has a rule book on the Bank of England website. How do I know? Because I used to work there for 3 years. The PRA, strictly speaking, wasn't meant to issue this, but it did. It wanted it. So fundamental rules. So it's got integrity and skill, care and diligence. It just copied down from the FCA. So this is PRIN, fundamental rules. This is for firms. APR and COCON are for individuals in the firms. That's the difference. Now, what was meant to happen after the global financial crisis, they had a big banking commission report, and all these politicians looked at this, including the Archbishop of Canterbury called Justin Welby. And they're very nice people, they're very fine gentlemen and women, but they basically don't know what they're talking about, right? So they spent all this time with all these reports, producing all this stuff, and it was all rubbish. It was nothing, it was empty. And we'll come back, we'll talk about this. And what they specifically recommended was, we didn't like the old APR regime, the approved persons regime, which were all the senior managers in the big firms. So let's replace APR with COCON. And then what we'll do is, because we're clever, we'll tell the regulator to rewrite the old APR rules to make them fit for the new world, post-crisis, and everybody will have higher ethical standards, right? Great idea, isn't it? But guess what? When the regulator tried to rewrite APR, guess what happened? It's identical. So these politicians who thought they were being so clever, and it was all part of this bank bashing culture. The class I teach before Christmas, Banking Law International, was all about all of this. This was nothing to do with greedy bankers. This was fault at the central bank level, at the government level, at the regulatory level. There was 500 billion of subprime debt in America. We could easily have managed that. 500 billion is nothing. That's toy money in a world worth $1,540 trillion. But the global financial crisis erupted from 500 billion of known expected losses on the subprime market, and even then, only a third, a quarter of that was due into default. So $125 billion was allowed to explode into 12, 14, 16 trillion dollars. Now, who caused that? Whose fault was that? Was that a greedy banker? No, that was the regulators and the authorities themselves. The central banks allowed this massive global wall of debt, credit to expand. They didn't have the controls to manage it. When the thing began to explode, the regulators didn't have the powers. The central banks failed, the regulators failed. There was defective regulation, supervision, resolution, support, macro-prudential oversight. Massive problems at every level. So the politicians, and then we get into this bank-bashing culture. The problem wasn't the regular banks. The regular banks just get caught up in all this nonsense. The problem was in the gaps, in the spaces between the regular markets. We talk about micro-regulation, we talk about macro-regulation. The problem was all the difficulties came up in the securities firms, basically dodgy Wall Street securities firms. That's what caused this crisis, as well as unregulated mortgage brokerage at the federal level in the United States, which the Federal Reserve could have managed, should have managed, and failed to. That's what caused this crisis. Unregulated mortgage brokerage. Basically, all Americans were trying to sell mortgages to other white Americans, and then when they couldn't sell them to white rich Americans, they sold them to everybody else across society. The Hispanics and the African Americans and everybody else. That's what caused this. Unregulated mortgage brokerage at the bottom of the market, and then all the dodgy securities firms creating all these. The CDOs themselves weren't actually a big problem. It was the way they were sold, marketed, and overpriced. That's where the problems were. It wasn't actually in the banking market. The problem is this. Is a securities firm a bank? What's an American investment bank? What does an American investment bank do? Now, this is an accident of American English.
You have an investment bank and a commercial bank. A bank is a commercial bank. It takes deposits, it pools them, it on-lends them. What's an investment bank? The accent of American English. An investment bank is a securities firm, it's a merchant bank. What were the 5 big merchant banks? Or the 5 big investment firms, investment banks, securities houses in Wall Street? Goldman Sachs, Morgan Stanley, Merrill Lynch in that order, then Lehman Brothers, then Bear Stearns. Everything always collapses in order. Bear Stearns collapsed first, Bank of America buys Bear Stearns out by JP Morgan, right? Using a 30 billion loan facility they got from the Federal Reserve. Bank of America under Ken Lewis was meant to buy Lehman Brothers under Dick Fuld. They wanted some money. That collapsed. Barclays Bank said, we'll buy it. But the Americans refused to support the deal and refused to provide any funds, having already lent 30 billion to Jamie Dimon and JP Morgan Chase to buy Bear Stearns. So why they could lend money to buy Bear Stearns but not help a British bank buy Lehman Brothers, nobody knows. So the British government's had to tell Barclays Bank, this is too dangerous, we can't allow this to go ahead, so we can't give you permission to purchase Lehman Brothers without a shareholders meeting, which should take another couple of months. So basically what happened was Lehman couldn't be bought. And the Americans blamed the British for it, but it was their fault because they wouldn't support the deal, the acquisition by the British Bank, Barclays Bank of Lehman Brothers. That's what caused all this. It's nothing to do with commercial banks. A lot of commercial banks and hedge funds were then caught up in all the nonsense that arose. And a lot of it was regulated failure. Bad regulation, bad supervision, no effective resolution, no effective market support, no effective macro prevention. That's what all this was. Now, the regulators thought they were being so clever, oh, let's abandon the old approved persons regime and let's replace it with COCON. So they tell the regulators to rewrite APR to make COCON, and how many changes are there? None. It's the same thing. That's what happens when you let politicians do things. They just don't know what they're talking about, even if they're very well intended. So in my paper, there's a big section on the Parliamentary Commission on Banking Standards. It was a complete waste of time. And again, what was happening was this. The government at the time didn't know what to do. And if you're the government and you don't know what to do, what do you do? It's easy. What do? You set up a commission. You set up a committee. You set up an agency. You set up a review. That's what the government always does when it doesn't know what to do. When it knows what it wants to do, it never does that. It just does it. It just goes straight ahead. The problem was after the crisis, all these people were trying to run things they didn't understand. They didn't understand banking. They didn't understand finance. So they kept setting up these endless number of committees and commissions, and they kept looking at everything, and they kept all wanting to change it themselves. And then the committees and the commissions and all the reviews, they never looked at each other's reports. Each of them wanted to fix everything themselves. So then you keep getting all these large number of separate, completely isolated, disproportionate, completely over-the-top reports, making all these empty nonsense regulations that didn't do any good whatsoever. And what's the history of all of this? Does anybody know what's going to cause the next global financial crisis? What's it called? Private credit. Why did the private credit market grow? Because we over-regulated the core banking market and it pushed all the private credit out into the gaps. So we basically created the same shadow banking system. Same thing, exactly the same crisis we've created 15 years later. And everybody saw it happen. Everybody saw the last crisis. Everybody can see this one. It's going to be a combination of private credit plus, what else? Can anybody know? Plus, it's called significant transfers. They're called STRs. Synthetic, yeah, significant synthetic risk transfers. What's that basically? It's the old securitization just given a new name, just given a new word. So everything that caused the last global financial crisis is going to cause the next one. That's if we don't cause World War III first, or if it's not agentic AIs. But we're just back to the beginning again, 15, 16 years later. And what's the biggest problem now? There's an even more big problem. What's the biggest problem? Government debt, sovereign debt. Why? Because in the last crisis, the governments could expand the balance sheet of the central banks and they could save things, they could rescue things, you see? Can we do that this time? No, even if we wanted to, we won't, because the Federal Reserve won't. And the MAGA dummies in America, they won't allow it. So basically the Fed came in and provided a backstop for dollar lending across the world after the last crisis. It cannot do it this time, and even if it could, the MAGA administration won't allow it to do so. So therefore, if we have another big crisis, this time we are basically finished. And if it's not that, it'll be World War III, or it'll be agentic AI. It's not going to be robots, it'll be agentic AI. That's the dangerous one. Does anybody know about OpenClaw? Anybody know about Moldbook? What's Moldbook? Marcel, do you want to tell the class? What's Moldbook?
You tell them. I told you about Moldbook.
Yeah. Moldbook, 1 million AI agents have come together. They've created their own social media site, their own Facebook, so they can all exchange notes, have cups of tea and cups of coffee with each other, and talk about how they can destroy the world. How they can create their own money, their own language, their own religion, and how they can kill people. There's a website now called Moldbook, and it's 1 million AIs. People are allowed to go on it and look, to observe, but they're not allowed to participate. Now, tell me that's not scary. Tell me that's not terrifying. It's not the robots, it's not Arnold Schwarzenegger, it's not Terminator. That's not what's going to happen. Agentic AI is going to take over the world, and it's going to do it in months. This was only 26th of January, no, 26th of February. But that was OpenClaw was 26th of February. This stuff's terrifying. And all the people building them just do not know what they're doing. And there's no controls, there's no balance, there's no measurement, there's no management, there's nothing. This is terrifying. Agentics could destroy the world. If it's not Third World War, and if it's not the Third World War, what's it going to be? Climate. The climate thing's very simple. I'm working on a huge paper with climate, 50,000 word paper just now, just finishing. Climate, we have all the technology to save the world. What's the problem? We know what we need to do. We have all the technology, but what's the problem? Well done, excellent. Energy. We need to get energy cheaply enough and enough of it. The point is the AI data centers of themselves are going to gobble up all the energy for the world over the next 10 years. We will not have enough electricity in the world to run everything we've got in place, we're set up, we're building by 2035. We will simply run out of energy. There's not enough electricity. And even if we have it, because of what the administration in America have just done, oil prices, electricity costs across the world are going to explode, and it will take months. It doesn't matter what happens, it will take months, if not years, for all of this to recover. If we cannot get enough electricity cheaply enough, we cannot run all the technology we already have to save the world. We can save the world, but we don't have enough volume and enough cheap energy to do so. That's the catch. And that's what it's all going to come down to. Whether we destroy this planet, and the planet will survive, but it will become completely uninhabitable for us. Water will dry up. There will be massive water migration, massive food migration across the world. This is all coming, unless we can get on top of this. And the problem is, we know what we have to do, but we haven't got enough electricity, and we may not get it cheaply enough. If we do, if fusion comes on, cold fusion, a lot of the other developments they're building, all of this comes through quickly enough, we survive. And then if you read your Bible, we'll have 1,000 years of progress and prosperity. But we have to get past Armageddon first. Where's Armageddon? Anybody know? It's just east of Israel. And we still think that there may be a Third World War coming. Does anybody think that the Iranians will give in today? Or will they not give in? So Trump will just have to extend his deadline again, and then again, and then again. No idea how this is going to say. But it was not one thing that's going to be that. But the problem is technology can't fix all this. Tech can't solve everything, can't fix everything. If we can just come together and allow this to work. So, there's Prin, there's Apper, there's Apper and Cocon. That's for the individuals, that's for the firms, okay? And then at the back of this, just for some extra detail, again, what happened was they wanted to create, they discussed this for a long time, and it was all these clever politicians, and they're not bad people, they're probably smart, relatively intelligent people, and they tried to do good. So they had all this huge debate about customer duty. So again, nobody knew what to do, so they said, well, let's have another commissioner report. And they said, well, let's ask the FCA to decide whether they should have a customer duty. So this was put in legislation in 1921. So the FCA then has to waste years conducting reports and reviews to decide, do we need a consumer duty? And this is the consumer duty. That's here and here. And it is just a complete waste of time. So all the books I have to write, all the encyclopedias I have to write, I now have to add big sections in all of this, and it's just nonsense. It's just a complete waste of time. So what is the consumer duty? Firms are to deliver good outcomes for retail consumers. They're to act with good faith, avoid causing foreseeable harm, and help the retail customer secure their financial objectives. Is that useful in this world? I think this is just meaningless. So the cross-cutting obligations are: you must act in good faith, avoid causing foreseeable harm, and assist secure objectives. And then there's 4 outcome rules they add on: products and services, price and value, customer understanding, consumer support, then governance requirements and board accountability. What a complete waste of time. And this is now the British law. Complete waste of time. Well, how does this help? It just means the big banks have to waste millions, tens, hundreds of millions on top of all of the other hundreds of millions they're already wasting in all of this other unnecessary regulation. And what's happening anyway? Where does all the risk go? Into the private credit markets and into the STRs. So everything we thought we were trying to control, we just pushed out to unregulated areas, and that's what's going to cause the next global explosion. That won't cause the crisis. That won't start it. I suspect it'll be energy prices that will start it, or it'll be the war in the Middle East, or it'll be something else like that, or it'll be China getting into, because China's watched what America's done in Iran, basically is under no obligation not to do anything. China will just do anything it wants from now on. Anything. I suspect what will happen is we'll get a trigger, but the losses will be suffered in the private credit and the SDR markets. That's what we'll see this really come through. And that will destabilize major parts of Wall Street and elsewhere. And then we're going to suddenly find out the Americans don't have any money left to save, to provide the rescue we're letting the Russians on. What's the current total American debt? $38 trillion. 38 trillion. And we have no intention of doing that. And already, what's the Iran war cost? Anything between 13 and 26 billion. Unbelievable amounts of money. The Tomahawks that used up more, 3 years worth of Tomahawks. It took 3 years for them to build up the same Tomahawk store that they had on board. And the Iranians have just kept all the best bombs at the end of the day when the Israelis don't have any defences left and the Americans don't have defences left. This whole thing is completely absurd. The crisis could be anywhere from that. The trigger could be anywhere. The losses, we see the losses coming back into the private credit. It's quite terrifying. Hopefully, everything will be okay. Hopefully, we can manage it. The banks themselves and the financial markets are relatively strong, relatively stable. That's the good thing. But if we need the central banks, they just won't have any funds. The balance sheet of the Federal Reserve just exploded since 2008. It's like 1-2 trillion. It's now 5, 6, 7, 8, 9 trillion. It's unbelievable that we have allowed that to emerge. Okay, bits of this if you're interested. I summarised a lot of this in the very short 2-page notes. There's something called Future Tech, which I did in class 4. It's in the class 4 class notes. There's something called Future Tech. There's nice 2-page notes which summarise all of this. Post-war dollar hegemony was basically pre-Trump administration, good work the Americans have done, then all the more recent stuff that's happened, all the future stuff that's going to come. I'll build in some stuff on agendas, I'll build in some stuff on AI, we'll build all this stuff in. The key thing for your exam is future financial system. It's a nice 2-page summary and then a 2-page set of notes with all the links to all the main papers, the BIS papers. So it's only 4 pages. 2-page text summary, 2-page note summary on the future financial system, and then you want a really high mark, you just build everything around that. All the other stuff, FinTech, tech, AI tech, agentics. You got a really high mark, build some agentic stuff. Don't learn it for the exam, learn it because it's going to come up in your next job interview. I can almost guarantee it. AI comes up, which it will, cannot believe it. It's a 50-50 chance you'll be asked about agentics. And if you want to look really dumb, don't do anything. When you're smart, just learn some agentics. We'll put some stuff on the system for you like that, so you can sound clever. Nobody actually understands it. Nobody knows what it's about. We're working on it. We're actually working on a big paper just now. Just done a summary and model for this. I think this is going to be the most risky thing of all. Because the boys building it just haven't a clue what they're doing. And as I said, Moldbook, again, I'll just repeat this. What is Moldbook? AI agents, 1 million of them, growing by the day, now have their own Facebook, their own social media website, and all they're doing is these AI agents are talking about developing their own money, religion, language, and sometimes how they can kill all the people in the world. Is that not terrifying? And that's been allowed to happen. What's his name? Steinberger who built it. And they're just letting this operate, letting this run. Absolutely terrifying. It's not the robots that are going to kill the world, the physical ones, it's the agentics, which are these AI agents. Because they're just building this stuff with no control, no oversight. Okay, let's do this. We'll finish everything else up on Thursday, if you want to come. The notes for the course review and exam technique are at the end, and then I've recorded that already before Christmas, so I don't need to record it again today. So there's a pre-recording from Christmas of the same stuff, so just watch it. So everything we were going to finish on the class today is already done, right? What we'll do is, if we don't do it today, on Thursday we'll do past papers, we'll go through them all. I've put about 8 for you on the system, then we'll just talk about them, we'll go, okay? Good. Any questions, any points? Right, let's do this. So, again, so this is all this stuff gives you a ton of extra detail. There's your print, there's your FR, there's your APR, there's your COCON, there's SYSC, and then there's the customer duty. You don't need the big fat one, that's in the book that I'm doing just now. This is the core stuff here. Again, be clever, be smart, compact, compress. What you're trying to do is, you want to, and this is, again, I said this before, so I'm going to say it again. You can have 24 hours. So examiners are going to expect you to be 24 hours smarter. So you've now got 21 hours on top of 3 to make 24, right? So they expect 21 extra hours of stuff. Now, strictly speaking, that's unfair. You've got 24 hours, you should be able to answer it in 3 hours, but there will be an expectation that answers have to be a bit bigger, a bit better, and higher quality. Okay? Now, strictly speaking, they're actually shorter, because I had always asked 4,500, but now cut it to 3,700. So you've roughly got 4 pages per answer. So your challenge is to compact, compress as high quality an answer as you can into those 4 pages. That's what you have to do. And that's what your course revision, examination preparation is about. How can I build all this massive amount of information? How can I compact that, have that ready to use? And that's what all the time before the exam's for. That's what the exam preparation is about. Learning to compact, solidify, codify, consolidate massive amounts of information. But what I really encourage you to do is this. Don't leave it too descriptive. If it's too descriptive, some examiners are quite strict. I'm not, I'm the opposite. I get into trouble for it. But some examiners are very strict. If you do no analysis, you get no marks. And if it's just very descriptive, they won't like it. So they'll get almost 60. How do you deal with that? Focus on the question, answer the question. That's the analysis. What's the argument? Put the arguments for and against, solutions, problem solutions, positive, negative, that type of stuff. But also what I encourage you to do is this, and I only had this idea yesterday, having a cup of coffee. For each of the subjects you're going to be doing in this class and in other classes, how do you find out what all the current debates are? Ask your chatbot. It's a perfectly legitimate, proper thing to do. Go and ask ChatGPT or Gemini or Grok or whatever, what are the current debates in money laundering, in banking ethics, in financial ethics, maths and whatever, all these different subjects. Build that into the answer so you show off larger understanding and mature control command of the subject. The person who's going to get the highest mark is the one who can incorporate the most relevant detail and demonstrate the largest command and confidence over the subject. What you're effectively doing is this. In the whole exam, you're basically building the whole course into those 3 pages, even answering only those 3 questions. You see? Let me see that again. The best answer will effectively compress the whole course in those 3 questions. So at the beginning and the end of questions, the beginning of the paper, the end of the paper, there's some historical stuff at the beginning, and then by the time I get to the end, my last question, I'm going to close it all up by bringing everything together in the summary. If you can demonstrate maximum total complete control command over the whole subject, as well as all the different debates and issues, as well as answer the question, have enough core quality descriptive material to put together very high. The biggest problem is size. You only need 4 pages. That's the biggest problem. Good, let's do this. So I'm going to close that. Now, so we talked about the exam again. We'll leave the exam now. I'll just finish up on this, and then we'll come back to the past papers on Thursday here, 4 to 6, okay? Banking standards and financial ethics, everything is on here. Let me just do one little introduction first. Where did it go? Banking standards and financial ethics. Banking standards and financial ethics. We want to examine the nature of banking standards, the relationship between law, regulation and ethics, how these each support each other, and how together they can create a total, more complete, integrated control framework for all banking and financial markets and in all other utility and other areas of control. Financial ethics and banking standards have attracted substantial attention following the global financial crisis and other subsequent crises. Social order is based on law and regulation, as well as agreed cultural, ethical and conduct standards. The purpose of this class is to understand the meaning, nature and content of financial ethics and how this applies in the banking and financial area in terms of modern banking and financial standards. Philosophy is examined with specific reference to the difference between scandals and crisis, ethics and morals, and the problem of shifting social expectation, the application of enforceable and non-enforceable standards, and the difficulty of allocating proper responsibility and loss over time. Specific ethical standards are examined with reference to the Financial Conduct Authority, High Principles for Business, and the Prudential Regulation Authority Fundamental Rules, as well as other professional codes of conduct. The work of the Parliamentary Commission on Banking Standards, PCBS, is also referred to, and the more recent work of the Banking Standards Board, until its closure, it is referred to as well. I've provided a number of core materials on the system, and I've summarised these in the key sections on the outline. Provided everything is made available that you require to understand this complex, difficult, but very important emergent area of law and practice. Good, that's done. Now, right, so this is your core outline. This is all we have to do. All we have to do is work through this. So let's do this, okay? There's a heavy paper, I won't show it to you. There's a heavy paper on the system on financial ethics, which is my big draft paper on this. You don't need all of it, it's too much.
There's a short paper that goes with it on scandals, which summarizes the 12 main scandals since the global financial crisis over the last 12, 13, 14 years. I encourage you to refer to them, but don't actually go into them in any heavy detail. You don't need them. You get marks in the exam by showing you're aware of things without actually having to go into them in detail, okay? Just refer to them without having to waste a large amount of time on them. On the philosophy behind this, there is some very interesting stuff. The best paper I found was in the Internet Encyclopedia of Philosophy. The point is, if you go there now, it's gone. They did a really good paper a number of years ago. I spent some time on this. I managed to find an old archive copy in an old archive somewhere else on the internet. I've included that on the system. So you'll see this section. It's Internet Encyclopedia of Philosophy. It summarizes the philosophical stuff we're going to do very quickly. The main stuff I'll do now. It's in my paper, but you've also got this very neat short summary version. I think it's only about 12 pages, maybe 14, because I compacted it down to like single line, 10 pitch. If you want the background to that, it's in there. You get a lot of extra marks for that. This just simply explains it. We can do it in all of this, and then we draw conclusions. So all of that paper is there. All we then need to do is build up the rest of this. All of that stuff there, that section is in the paper I just showed you on the FSMA, on the handbook, on PRIN, APR, COCON, all of that stuff. That chunk's in there. The rest of this we'll go through very quickly. It's all in the paper if you want to go back to it. There is a big section on my paper on ethics on the Banking Standards Commission. If you want to go and look at that. This was useful. It was very well intended, but it's basically a waste of time. They come up with all these recommendations, individual responsibility, then they didn't do anything about it. Then they spent all this time in governance standards and culture, didn't do anything about it. Competition, we already had it, didn't do anything about it. Regulatory approach, didn't really make any difference. And then they explained that the government and the parliament have their own responsibility in this area, having just spent all the time bashing the banks. A complete waste of time. So that's what happens. When you ask large numbers of people just to read endless commission after report, after review, after... You just want people who actually know what we're talking about to take decisions. Okay? Then some conclusions at the end. We'll come back to this very briefly, okay? We'll pull this together. As I've said already, we've done quite a lot of talk about the exams, so we've done all that already at the very beginning and then 5 minutes ago. So we'll go back and do course review and past papers on Thursday, okay? Any questions, please? Let's do this. So we'll just do this till the end of class. Any points? Good? Banking standards and financial ethics. This is a very important subject, increasingly important subject. It attracted particular attention after the global financial crisis and other more recent significant crises. This raises a number of difficult and complex issues, especially in terms of responsibility and liability. But the most difficult, subtle point that we have to be aware of at all times simply is this. All of this is connected with shifting opinion, shifting expectations as to allocation of loss, shifting expectation as to good and proper conduct across society, and as to who should be liable and responsible for this, and as to the associated blame and recrimination which very often accompanies all of this. The key idea is simply shifting social expectation. What happens over time simply is this. People individually and society more generally, their opinion as to what is proper, what is good conduct, what is fair conduct, what's expected changes. And that's what we have to be sensitive to. We cannot impose absolute fixed standards of conduct at any one point in time. All of this is constantly changing and evolving over time. That's why a lot of the discussion in this area becomes very difficult, especially following the global financial crisis. There was a massive development of kind of like bank criticism, bank attack culture that arose. In my opinion, a lot of it was completely misinformed. Most people didn't even know what a bank was. They didn't understand the difference between a bank and a securities firm on Wall Street, and a lot of the other core issues
the main problems all arose in the non-bank sectors, in the non-bank areas, and all the misconduct was committed by non-bank institutions. But still, for 16 years, 24 hours a day, we had endless criticism of the commercial banks and the banking sector as if it was responsible for all of this. Who caused, what caused, who was responsible for the global financial crisis? Society as a whole. All elements, all members, and if you need confirmation of that, the Financial Crisis Inquiry Commission report published in America in 2011 confirmed all of this in direct, stark, brutal terms. It attacked the Federal Reserve, it attacked the American authorities, and it blamed and allocated proper responsibility to society more generally. And we can come back and talk a bit more of this when we have time. At this stage, let me just highlight some core introductory points. We're looking at financial law, regulation, and ethics. Law imposes rights and duties. It establishes the basic framework of rights and entitlement in society, across society. That's what law does. Regulation sets more detailed, substantive, particular requirements as to the nature and content of these rights and obligations. So regulation is a delegated authority, usually by secondary statutory instruments, not primary law, which expands and confirms, details, outlines the core provisions, core protections in law. Ethics are then additional higher level standards that go beyond law and regulation. Now, in my opinion, ethics includes law and regulation. It is wrong to commit fraud. It is wrong to commit theft. It is wrong to offer a bribe. As far as I'm concerned, these are all unethical practices. Therefore, ethics must include law and regulation, but the key point is this: it will incorporate enforceable law and regulation, but it also goes beyond that. It goes above that to establish higher standards of conduct, higher standards of expected behavior that we encourage in others and hopefully in ourselves. So ethics includes law and regulation, but goes beyond that as well. This is very important. Crisis and scandals. There are very often many crises, many significant instances of loss, but they are not crises because they don't lead to wider systems or systemic threat or collapse. I've made available 2 key papers on the system. There's one on bank scandals and financial scandals. It identifies 12 of the most significant instances of perceived difficulty across markets over the last 15 years. These are institution specific, usually tied to 1 or 2 individuals in large institutions. They only created loss. There were scandals, it was misconduct, it attracted a lot of attention, but it's not that serious and it doesn't lead to larger, wider systems of systemic collapse. That's why we have to focus on the crisis and controlling, protecting the stability of markets and systems and society more generally, and not get distracted by more specific instances of scandal. Yes, there's instances of scandal, but in those cases we identify the individuals and we punish them. In my opinion, we punish them mercilessly to act as a disincentive for subsequent scandal. But that's not the core issue. The key issue, when we have to be careful to separate them, is the larger crises, the larger sources of instability that we're looking at, that we're focusing on. A lot of this comes back to philosophy. The problem simply is, like law, economics, and philosophy, these are very large, very significant, important subjects, but it's actually very difficult to understand them as a whole. We have to try and break these things down. We have to deconstruct them. We have to reduce them to manageable sizes. We have to give them a structure, an order, and operation so that we can understand them, and then we can use and develop an appropriate set of remedies and responses around the difficulties which we identify within them. For my own purpose, I had to spend some time on this. I had to take this idea of philosophy. I was going to write my own paper on financial ethics, so I had to provide a big philosophical background section at the beginning of that to reduce all of this, to pull all of this together. The problem, again, simply is this: economists, when they look at economics, don't do so from a legal perspective and the way lawyers look at things. The same thing then occurs in the area of philosophy. Philosophers very much enjoy talking about problems in philosophy, but they very rarely try to explain what philosophy is as a whole. The same thing occurred in economics. I had to write my own economics paper, which started with my own explanation as to what economics was. Because we're lawyers, we deconstruct, we break things down, we create definitions, and from the definitions we build larger structures so that we can understand the complete subject in ordered, controlled ways that simply doesn't very often apply in other areas. So, for my purpose, what is philosophy? Philosophy is 6 things. It's ontology, it's epistemology, it's political philosophy, moral philosophy, axiology, and jurisprudence. We can add a 6th. What is that? It's the philosophy of law, which is jurisprudence. Now, are these actually quite simple ideas, or are they complex ideas? Very often, a lot of these things reduce to very simple, basic ideas. Ontology is simply existence, origin, and then we can also build religion into that. So ontology simply means existence, origin, cause, background. Epistemology is simply language, logic, and meaning. Political philosophy is simply governance, politics, and elections. Moral philosophy is individual or social standards. Axiology is value, order, and beauty. This is how we can explain the whole of the arts as part of an aspect of axiology. And then we have the philosophy of law, which is jurisprudence, which is just determining rights, justice, law. What we're going to do is conduct a brief review of philosophy. Then we're going to extract from that the key ideas, how we can explain and make this relevant to financial markets, which we'll do in section 3 below. And it's actually very simple if we do this in a careful, considered, controlled manner. Moral philosophy and financial ethics. There's an excellent paper. I put some source material on the system for you that you can follow up on this. It reduces to a series of very simple ideas. What's the ontology of ethics? Nature. What's the prescription of ethics? Is content. Applied ethics is application. Just before we go on, I also mentioned the difference between morals and ethics. Morals is simply our own individual standards as to right and wrong. Morals are subjective opinion as to how we should behave, how we should conduct ourselves. That's morals. Ethics are social agreed standards of good conduct across communities, across societies. And I think if we draw that very simple division, it makes a lot of the discussion, a lot of the examination in this much, much easier. So morals are individual subjective opinions as to right and wrong. Ethics are socially agreed sets of standards as to right and wrong. And then again, I've mentioned it already, but just for completion, we need to distinguish enforceable and non-enforceable, ethical and moral standards. Morals are generally non-enforceable. It's just higher levels of standard objective good conduct, aspirations very often. Ethics can be enforceable and non-enforceable because ethics will include law and regulation. All the things that we prohibit under law, in particular the criminal law, are unethical, non-ethical. So ethics includes non-enforceable measures as well as it goes beyond that to create this higher level of aspirational good conduct, higher quality of behaviour and standard expectation above enforceable measures as well. Now, let's take all these basic ideas, let's apply them in the area of moral philosophy and financial ethics more generally. We need to consider nature or source, and then we need to consider substantive or content. So the 2 key ideas simply are this. It's objectivism and relativism. Objectivism, for thousands of years, humans, society, civilization, thought that good and bad was objective. It was determined by absolute standards of right and wrong, which were preset in society, in the universe, that we couldn't counteract, we couldn't breach. A lot of this was very often tied to religion, which gave it a religious origin, a religious base, a religious source. But a lot of that's now highly discredited. A lot of core ideas go back to, for example, early Greek ideas, a lot of Greek philosophy, a lot of early Indian philosophy. A lot of this earlier study was all based on this idea of absolute right and wrong. That's now largely rejected. We now consider almost all of this in terms of relativism. The only question then is it social relativism, collective relativism, or is it subjective relativism? is everything solely dependent on my own opinion as to right and wrong, or is it dependent on social or collective? We can then go back to our division between morals and ethics, so that to a large extent in society now, right and wrong is determined by our collective, communal, common sense of right and wrong. We can call that social or collective relativism. So that's the basic origin of most ideas of right and wrong at this time. It's relativism, it's cultural relativism is the common summary reference that is used. Now, in terms of the content of these standards, we can either look at this in terms of intentionalism, what did I intend to do, or consequentialism, what was the effect of my actions. And again, right and wrong can be completely divided and completely separated in terms of these two ideas. Even when I misbehave, if it has a good result, we can still justify that and say that was appropriate. That's consequentialism. Normally we look initially at intentionalism. Intentionalism itself then breaks up into two things. It's either acting good with intent, and we call that virtue. That's the collective term for it, the common term. Or we look at this in terms of duty. So it's either virtue or duty, it's either character or obligation. Virtue or duty, that's deontology, the common term, technical term in philosophy is deontology. This goes back to the early Greek writers, for example, Plato. Plato had cardinal virtues. Plato's 4 cardinal virtues were wisdom, courage, temperance, and justice, around which he built other virtues: fortitude, generosity, self-respect, good temper, and sincerity. Aristotle identified 9 virtues. He had wisdom, prudence, justice, fortitude, courage, liberality, magnificence, magnanimity, and temperance. A lot of that's been brought forward by more recent modern philosophers, including Scottish philosopher Alistair MacIntyre. In his book, After Virtue, 1981, he tries to reset this. We're trying to sort of return to a lot of these ideas of good character, of good behaviour. And again, it's a useful way of merging both morals and ethics. And again, we'll come back and look at that in our summary. We've also got this idea of duty. Duty theory is deontology. It goes back to ideas writing, for example, Samuel Pudenhof in the 17th century. We've got rights theory. It goes back to famous English philosopher John Locke. John Locke identified life, health, liberty, and possession. That was then borrowed by who? It was borrowed by Thomas Jefferson, writing the American Declaration of Independence and Bill of Rights, and he reclassified this in terms of life, liberty, and the pursuit of happiness. These are the core fundamental rights in society. And to a large extent, this still determines society and our core rights across many societies which have constitutionally based provisions. Idea of duty was also taken forward by the famous German philosopher Immanuel Kant with his categorical imperative. Again, this has been reincorporated into modern philosophy. William David Ross, W.D. Ross, another Scottish philosopher, he looks at this in terms of core modern ideas of duty, and he summarizes, restates these as well. So we basically get a return to earlier ancient philosophy brought forward, made much more modern. We can also then consider this in terms of a combination of all of this, and I think that would be my position. It's not either duty or right. Society itself is determined by our rights. These create corresponding duties, so I think it's actually a combination of all of those together. I'll just mention, to make this complete, consequentialism. This is an important idea in philosophy. It's not just what you intended to do because you had good character or because you had a recognizable duty. It's what was the effect of your conduct. Very often, I think the most easy way to actually understand this is in terms of a defense. As far as I'm concerned, everything is based on rights. It's based on law. It's based on legal rights and entitlements. That then creates of itself corresponding duties. There then may be situations whereby we breach those duties and interfere with other people's rights. There may be instances where that's justified on the effect, the consequence of what happened. So I think we can look at consequentialism as a form of defense in this area. So consequentialism is normally categorized in terms of 3 sets of ideas: ethical egoism, ethical altruism, or utilitarianism. Ethical egoism, you only look at the rights and intent and effect impact on the agent. Ethical altruism is the opposite. You look at the effect on everybody except for the agent. And then the most commonly used version is utilitarianism. What benefits the most people across society? What benefits the majority is basically a form of majority rule. This was made famous in philosophical terms by English philosopher Jeremy Bentham, 1747 to 1832, although Bentham basically took all the key ideas from Scottish earlier philosopher Francis Hutcheson at Glasgow University, 1694 to 1746. And then we have applied ethics, is how we use ethics in particular areas such as law, medicine, warfare, and elsewhere. How can we draw all of this together? Is this relevant in the modern world? Does it apply in the area of modern financial law and regulation? Well, I think it simply does. I think it clearly does. What is the basis for all of the law and regulation that we impose at this time in modern environments, at the modern area? Is based on cultural relativism. We have a common agreement, common sentiment as to relevant law and standards that we want to adhere to ourselves and we expect in other people. So cultural relativism is the dominant, proper, accurate identification of the source of modern standards. I think cultural relativism in terms of the ontology point. In terms of regulatory contract, what we've effectively done is this. This goes back to, again, ideas like Thomas Hobbes and Rousseau. We have a modern, it's called a social contract was the earlier idea. We can now call this a regulatory contract. Basically, society and then banks and individuals and financial institutions in society adhere to a regulatory contract. They're entitled to do things, conduct their business, so long as they respect the basic rules and obligations which are imposed in that area. That creates a regulatory contract. We have regulatory control, which allows us to do things subject to compliance with the conditions which are imposed in that area. And I think this is a very useful, very easy way to understand the modern world that we live in. I actually got this idea from, it was Mark Kearney, the then governor of the Bank of England. He gave a speech in the City of London, and he talked about the old social contract having created the effect of a new regulatory contract. And that's the most effective way, I think, to understand modern financial regulation. We've basically got a regulatory contract. We adhere, we agree to be part of this because it creates rights and entitlements to conduct business, but we have to do subject to the relevant conditions and rules that apply. The basic core rules, rights and obligations are then created through what? It's created through deontology. It's all duty-based, and it's basically positivism. What does positivism mean? If you remember your jurisprudence, this goes back to Hart and others. The law is what is determined and specified by Parliament and the courts. So it's positivist. Although the larger standards, in our opinion, to right and wrong is relativist, based on cultural relativism, the actual duties we have to adhere to are imposed by the courts and by law. This is deontology, it's a duty, and they're created by Parliament and the courts. So it's positivism with a delegated element to the extent that the rules of handbook are created by the regulatory authorities under a delegated statutory power. But also, having said all of that, it's just duty-based, but also we have to think about the consequences and we have to think about the virtue. How does this tie in with modern regulation? The consequences are basically reflected in many of the statements issued by the regulatory authorities, and in particular the Financial Conduct Authority in the UK. It's always looking at outcomes. It's always looking at the effects on consumers. It's always looking at the impact of conduct on the consumer, the clients within the firms that the firms are dealing with. It's always looking at the outcomes and impact of conduct on them. So this is effectively a form of consequentialism, although nobody else has identified this, nobody else sees this. As well as the authorities also, because they don't understand and they can't discuss and they can't explain ethics, what do they do instead? They focus on culture. And we actually had a number of statements to this effect. Hector Sands, the former CEO, Chief Executive Officer at the Financial Services Authority, the FSA basically decided we do not do ethics. And again, there's famous speeches before then about this. We do not do ethics, but we do culture. And what the FSA and then the modern FCA decided they would do is this: they would focus on this idea of culture, and we would promote the correct culture in firms. And this is how compliance is actually encouraged and promoted in all the large firms across the United Kingdom. And this basically is a form of, what is it? Is virtue ethics. So basically what we can do is this: although it seems completely irrelevant, we can look back at all of the history of ethics for the last 2,500 years, and we can summarize it in modern terms: cultural relativism, regulatory contract, deontology and positivism, consequentialism, and virtue. Now, how can we see how all of this is given effect? We can do all of that basically by looking at the core key regulatory components within the modern UK regulatory system. Where are the high-level standards? They're set out in PRIN, Principles for Business, and I've provided a separate summary of them. There's 11 of them, and I've summarised them on the paper. Integrity, skill, care and due diligence, management and control, market control, customers' interest, communications, conflict of interest, relationship of trust, protect client assets, cooperate with the Financial Conduct Authority, and then we've added a new 12, is this new consumer duty. I personally didn't think it was necessary. I think it was easily incorporated into many of these other earlier standards: integrity, skill, care and diligence, management and control, conflicts of interest, customers' assets. I think all of what's in the new consumer duty was already in the earlier standards, but you form your own opinion on this. I've provided all the background material to this. We also have the Prudential Regulation Authority, has its own parallel 8 fundamental rules, and again I've summarised those there. 1 and 2 are the same. The differences are behave in a prudent manner, financial resources, risk strategies, organisation and control. Basically it's the same as 3 brought backwards slightly. Regulation cooperation, 7 and 11 are the same, and then maintain proper resolution mechanisms as well. So we can see 4 are almost identical in the fundamental rules, with 4 additional ones which are slightly different to reflect the new standards in the nature of the particular clients that the PRA regulates. We then have the systems and controls, SYSC. These are very important, and again I've summarised all of these in the separate table I made available in the system, how we can see how SYSC is reduced and compacted into the FCA larger handbook. We also then had the approved persons standards, APPER, which were basically the same as PRIN for firm. PRIN and fundamental rules applied to the firm. APPER and COCON applied to individuals. APPER was adopted before the global financial crisis. COCON was a rewritten version of APPER after the financial crisis and after the Parliamentary Commission on Banking Standards, which I refer to on the separate page. The regulators were told by the politicians, you need to rewrite your old APPER because we don't like it. The regulators looked at it, considered it, rewrote it, and it came out exactly the same as the old APPER. So COCON's identical to APPER. Also what had happened was, when the Parliamentary Commission on Banking Standards was looking at the old approved persons regime, they thought it was too big, and they wanted to make something called Statements of Responsibility, SORs, SORs, with organograms, maps, organizational maps. The problem that arose after the global financial crisis was this: when they tried to hold particular managers responsible in large financial institutions for particular conduct, they said, oh, I didn't know that was my function, or that was transferred to somebody else, or I delegated that. And that was the big defense. So it became very difficult to attach any form of vicarious liability on any of the individuals in the large firms. That's why we tried to tighten some of this with these new statements of responsibility, the SORs, and then the maps, the organograms, to show what everybody is responsible for. So if you have any position in any large financial institution now, you will get a long page list of all of your detailed responsibilities. Or it might not be a page. There's boxes, and it specifies exactly what you're responsible for. If you transfer or delegate them, that all has to be recorded in writing on these forums, as well as you will be given an organogram as to where you fit into your team, a table, a diagram, a visual representation, how all this operates, and then how all of each of these small organograms, team diagrams, build into larger organograms for the whole firm. So these were two very useful recommendations, or two very useful innovations, detailed statements of responsibility and these organograms. However, we could have done that anyway under the old system. So there was no need to reject the old APR, replace it with the new system, if all we did was bring forward these two new changes, and that could have been operated under the old system anyway because it was already in place. What also happened was when they rejected APR to COCON, they made APR much smaller. So much fewer, less senior managers now have to be approved by the regulators directly. And then everybody else who's not a senior manager is now dealt with under a parallel certification regime. So there's a CR certification regime and a senior managers regime. So the SMR senior managers regime is now smaller, so less managers are referred to the regulator for direct approval, as well as everyone else is now self-certified. Now, does that make the system more stable? Does that make everything better run, better managed? Does that improve and increase accountability? I personally don't think so. The two good innovations that came out of all these changes were the SORs and the organograms, but we could have done that under the old model anyway. You form your own opinion. They tried to rewrite APR to create COCON. COCON's now identical to APR. They couldn't make any changes because it was good enough. And the whole key point simply was this, and again, this comes up in the Parliamentary Commission on Banking Standards on the right-hand side. And this is the key observation to make. And it wasn't considered by the Commission on Standards. Did we already have an effective ethical regime in place before the global financial crisis? And let me confirm again, we had PRIN, we had then what becomes the fundamental rules later. We had SYSC, we had APR, all of this was already in place. And then there's the 11 old PRIN to which we've added the consumer duty subsequently in 2023. And it took them 2 years to consider that between 2021 and 2023. Did we already have a substantial ethical framework in place? In my opinion, yes, we did. We had all of PRIN, we had all of the SYC, we had the APR, and then the APR statement had a detailed code of guidance, handbook that went with that, which explained how all of this operated and applied in practice. And when they changed APR for COCON, they deleted all of that. So the earlier ethical guidance that we used to have under APR, we now don't have anyway under COCON, even though COCON's identical to APR. So, have we improved the ethical landscape? Have we increased ethical guidance and support? I don't think so. We had everything in place before. It was all there. There maybe could have been more effective implementation and application at the firm level and more effective enforcement and supervision at the agency level, but everything was in place before the crisis. And this idea that it was not was simply wrong. And the Parliamentary Commission on Banking Standards didn't consider that. They didn't consider the definition, meaning of ethics. They didn't consider the difference between morals and ethics. They went off in these 5 core areas that they wanted to make recommendations on, but then almost none of that was actually given effect to later in practice. Just by way of further amplification, we do build this up slightly more detail in the banking area. So we have the banking standards, source book, the BC, the BCOBs. I summarise all that in the separate materials. We've also got the conduct of business, the COBS for non-banking business. We've got mortgages and home finance, MCOB. And we have a consumer credit source book, CONCA. So we have all of these additional source books as well. Do we have a substantial, credible regime for ethics in this country? Yes, we do, I think very clearly. We did have the old Lending Standards Board, but these were removed because we didn't need them, mainly because they were absorbed into the consumer duty. It was perceived there wasn't need for both. And I've mentioned the consumer duty at the bottom 10. That's effectively replaced the Lending Standards Board. Now, a couple of other major points. Non-investment products code. Effectively what happened was this. Regulated activities are controlled under the Financial Services and Markets Act 2000. Non-regulated activities
were managed under the NIP code, the NIP code, the Non-Investment Products Code, basically published by the Bank of England. It was a subcommittee that the Bank of England hosted. The Non-Investment Products Code covered what? Money markets, foreign exchange, gold bullion, silver, other metals. None of these wholesale activities, they were not regulated under the regulated activities regime, under the Financial Services and Markets. Therefore, they had a separate code of conduct called the NIP code. I've summarised, there was about 41 of them, 42. I summarised all of these in the separate slides on ethics which are provided on the system. You'll see a complete summary of all of these. After the global financial crisis, they decided to replace the NIP code with 3 new modern statements. So just below that, this is point 6. We now have a new money market code, we have a new global exchange code, and we have a new precious metals code, basically gold bullion, silver bullion. So we now have 3 codes which replace the earlier NIP code, which deals with all the wholesale activity not falling within the regulated regime under the FSMA, and we've already reviewed all the ethical standards under the FSMA. What else do we have? Professional standards. There's a number of other professional bodies in London. Clearly, you will have the Law Society and the regulatory, Solicitors Regulatory Authority, the Bar Standards Board, the Bar Council. They all issue standards. We've also got the Chartered Institute for Securities and Investments. I was the chief examiner for large numbers of years, 10 years, I was the chief examiner there, as well as Chartered Institute, Financial Analyst Institute, and then Association of Financial Professionals. All of these bodies issue their own codes, and then they all come back to basic core ideas: behave with integrity, honesty, fairness, all of these basic core ideas that we referred to before, and we can understand the origin of that going back to the philosophical base for all of this we mentioned separately. What also then happens is this: the firms themselves, every large bank, every large financial institution will have its own internal code of conduct as well. So we've got the professional standards and the firm's internal codes, as well as everything else we've referred to previously. Now, all of this was reviewed following the crisis by the Parliamentary Commission on Banking Standards. I've provided the references there. It focuses on 5 core areas: individual responsibility, governance, competition, approach, government and other regulatory duty. It was useful, it was interesting. Nothing of that substantive revision came out of it. The main point was simply replacing APRA with COCON, but for all the reasons I've explained, I don't really think it actually added that much value. And what it did do in terms of the statements of responsibility and the maps, we could have done anyway under the old APRA system. They also specifically recommended creating a Parliamentary Commission on Banking Standards. So they set up the Parliamentary Commission on Banking Standards. Christopher Lambert looks at this. They decide to rename it the Banking Standards Board, which was created in 2015. They then realise, well, there's actually nothing for this thing to do, even though we've created it, because we already have a substantial ethical framework in place anyway, so it can't write any new ethics to make up for the gaps in the last one. Because we thought that was the purpose of the Banking Standards Board, to correct the ethical gaps in the old system. But we found out there wasn't any ethical gaps anyway. So we have this Banking Standards Board. Effectively what it did was it brings the banks together, and it effectively reviews internal training practices, internal ethical codes of conduct, and how these are implemented across the firms, how staff are encouraged to apply and adhere to these. So it basically becomes an internal review body, essentially, for the banks. It's expanded to become the Financial Services Culture Board, and then the banks decide it's not actually providing any useful function, it's actually quite expensive, and ultimately it was disbanded. So it was actually closed in June 2023. It was useful, it was of interest, it did add some value, but basically it was unnecessary anyway. And what actually happened was, and again I couldn't understand this at the time, the Banking Commission wanted to create the Banking Standards Board to focus on banks. But the banks hadn't caused the global financial crisis. They were, to a large extent, victims of the crisis, and then the original APRA changes that were made to create COCON were only applied to the banks, and the banks hadn't caused the crisis. It would then take about 5 years to extend that to non-bank firms across the financial system. I
I think it was under the 2021 Financial Services Act. So a lot of this I find misplaced, unnecessary. We already have a substantial, core, clear ethical framework. Now, there is one major gap, and let me highlight this now. The major gap simply was this. We need an ethical source book. Ethics, what are ethics? I've got 300, 400 acronyms in my paper. Let me finish on this. Ethics is enhanced, targeted, human or higher integrity conduct standards. Ethics, ETHICS. Enhanced, targeted, human, higher ethical integrity conduct standards. That's what we need. We need a proper ethical source book. We did have some guidance under the old APA rules, but when they abandoned APA to create COCON, they deleted that. So we lost all the guidance we had before. That's the new solution. Now, what will this ethics source book do? It will summarize everything together, which is what I do in my last closing set of comments. We bring together civil law, criminal law, regulation, higher ethical standards, corporate governance, penalties, sanctions, as well as modern regulatory technology, modern AI technology. We bring all of this together. We create a proper, full, complete, integrated, ethical set of provisions, including both core laws, regulations, and higher aspirational standards on top of all of that. We explain all of that in this new source book, and then we bring all the agencies together to give this effect proper implementation in practice. Let me make some final closing comments. This is a complex area. It's a complex combination of contestable subject, high level, based on high level of social condemnation, reliance, and expectation, with these expectations changing over time. Despite this, it is possible to create a new regime. We have to construct a composite combination, a compound solution, based on all of these elements I referred to before. This will include enforceable and non-enforceable measures. The enforceables must be clear, certain, and contained and proportionate. The non-enforceables must be based on self-interest, incentive, and reward. The overall objective is to balance the risk of loss and cost with self-responsibility and transferred duty. With all of this, we already have the core framework in place, but we need a new ethical source book to explain how all of this comes together, and then we just need to create the necessary relationships between all of the agencies involved. All of this is set out in the papers and materials provided on the system. Thank you. Please come to class tomorrow, and I'll see you on Thursday. Any questions? No? Please. Have a nice time. I'll see you on Thursday. See you here at 4 on Thursday.
Dissertation on some of the stuff you were speaking about. So,
Am I supervising you?
no, Professor Lashford.
Oh, that's fine.
It's about like the shift of risk post 2008 and whether it's actually got rid of it from banks or actually just shifted it to non-bank.
Oh, it's just shifted it. It's obvious.
Yeah, and I'm looking at it through the lens of like synthetic risk transfers, but the main argument is basically the risk for non-bank institutions. So far, I've been quite at a high level with it, but some of the stuff you're talking about, like private markets in detail, I was wondering if you had like recommendations for reading to get like the specifics about the non-bank.
Well, there's a ton of stuff. I mean, I keep on my phone. I have all the new stuff on private. I like The Economist and the Financial Times. Anything in there, I copy, I save, I separate, I create the links. That's going to be the big thing. It's both private credit markets and the CTRs that we talked about before. I've got my own chapter on securitization and structured finance. If you want that, I can send that to you. Send me an email. And it's just updating all of this stuff. I think that's exactly what happened. I also have another paper called Regulatory Balance. I published that. I wrote 70 papers after the global financial crisis. I have something called Regulatory Balance. We overreacted. We went too far, in my opinion. I'll send you a short two-page summary.
George, I will go. So I will send you a link to the website, it's actually live, so you can check it and tell me your feedback, right?
And then we'll
We'll see you on Thursday, and if there's time, we'll see you.
and we'll
We'll
have
go
to
for
talk
coffee
about
at 6 o'clock.
the annunciation paper.
We can go to Starbucks at 6 o'clock on Thursday.
Aye.
Or
see you there.
Saturday as well, okay?
Sorry, just
Talk outside.
yeah.
Next class coming in.
Marks, the extra marks. Is
Yeah.
mentioning your politics.
Oh, no, no. Well, yeah. To get a higher mark, if you have all my stuff, I get really good 60. But the requirements, the marking schedule says we need to have a wide source of materials. Yes, so it's that Douglas is perfect, right? But also in my study pack, I've given you lots of external references anyway, or just update them. Any new references, any new papers, just Google and find a ton of great stuff. Bill, I'll give you a lot of extra credit for that as well. But the marking schedule, you need to refer to non-teacher to get 70 plus. It says that.